Ladies and gentlemen, welcome to the Midday Market Monitor. Today is going to be one of those days that goes just a little bit long. We've got Palantir earnings later after the close. We'll be live all the way through. So it's going to be another one of those like five and a half hour long streams. So if you could stick with me, awesome. If you have to come back, no problem. Just we will be live all the way through to listen to the Palantir earnings call. That said, I want to go through. We've got a couple different things happening. We've got guests coming on. We have to talk about some of the earnings that happened last week. I was a little bit busy. It got leaked who I was doing the podcast with, if anyone saw that. I did a podcast, obviously, with Anthony Noto on Thursday. And then on Friday, I had an in-person podcast that I was going to keep as a little fun secret. But turns out Vlad couldn't hold the secret very long because his car broke down in the middle of the 401 and he walked on the highway to get off of the very, very busy highway and come join me on the podcast. Wild. So the podcast did happen. It's actually a long weekend here in Canada, so I'm not supposed to be working, but I consider myself a man of the American markets. We follow American stocks. I use only American currency. I work on your guys' holidays. So my editor's not here, and the podcast studio and all them, they're all taking the time off. So I can't get the show out just yet because they have the clips. Should be out tomorrow. Yeah. But freaking awesome. This podcast was so fun. And everyone was clowning on me in the comments. They said, "Why didn't you go and pick him up?" I had no idea. It was a pretty interesting story. So essentially, I get an email from them. We were supposed to do this show at 10:30 a.m. Okay, so that's why, by the time we got back, I had to move the show to 2 p.m. So then I could go live that same day. But essentially, whenever we were going to go do this, I get messaged by, their team, Vlad's team, and they said, "Hey, our ETA is actually going to be 10:05. Is there any way that we can start early?" I said, "Well, I'm booked for 10:30, but I'll message the producer and see what we can do." I messaged them. I said, "Hey, can we arrive for 10:05? He didn't get back to me at first. Vlad's team actually messaged us and they said, "No problem. If not, let's just go get a coffee to start." I was like, what? Okay, I guess I'll have, coffee with Vlad and his entire team. It was like head of comms, head of legal. Like it was like the whole team. That's why it's funny. People were wondering who took this photo. There's like a line of ducks behind Vlad here. There's so many people that were with him. That wasn't part of it, but So anyway, the producer moved the podcast from 10:30 to 10:05, and I swear to God, this is true. Okay, you want to hear the insecurities that I have? I was sitting there and I get a text from his team that said, "Hey, let's just go get a coffee if we have to wait till 10:30. And I was sitting at a coffee shop whenever he sent me that. I was sitting at Tim Hortons. And I was like, "Oh, Tim's is not good for this multi-billionaire." So I got up, got back in my car and moved across the street to the Starbucks. And I was like, "Yeah, we can meet at a Starbucks." I'm that insecure. Anyway, it didn't end up happening. We didn't end up going on a little coffee date. I arrive to the podcast studio, met by like Robinhood security team or whatever. And they're like, "Yeah, Vlad's car broke down. But don't worry, they're getting an Uber. They'll be here in a moment." So I was like, "Okay, cool." I go inside, make sure the studio's all good and done up and everything like this. Get the logo and everything up there. But they didn't arrive at 10:30. They arrived at like 11 something. And they were like, "Yeah, the Uber couldn't pick us up on the side of the 401, so we had to walk." And so it was like the entire company's like the balance of this company was on the side of the 401. It was like Vlad and a bunch of their, super high up team members were just duck walking on the side of the highway. I had no clue though. Everyone was making fun of me for not picking them up. By the way, I drive a coupe, so I was like, I have to like put up the chair and put Vlad in the back seat. But yeah. How many people was it a clown car? No, it was like one of those Escalades, like yeah. The car that you think the billionaires drive in was exactly what it was. Okay. Yeah, I don't know. But anyway, they called for an Uber or something, and then the Uber came on the other side of the highway and was like, I don't know what to do here. But yeah. So anyway, it worked out. That podcast should come out soon. Ton of fun. I'm going to try to, at any moment, do the in-person podcast. It was so much more fun because you really get to feel the emotion of the person on the other side of the table. And it's actually not that bad to rent the studios and everything. Like it works out fine. So I'm going to try to do that going forward. It's just, I'm in Toronto, Anthony Noto has no business being up here, and most of the companies that we cover have no business being up here. So that might be hard, but for the, if I ever do an interview with Toby Lucky or something like this, I'm going to try to do that in person rather than virtually. Okay. Did I mention SoFi with Vlad? So I didn't mention it. I wasn't going to mention it. He mentioned it. He said, "Yeah, I saw your podcast with Noto." I was like, "Oh man, I really didn't want you to bring that up." He also brought up that the first podcast that he's ever seen with me was me bashing Robinhood, which is true. I was not a fan of it super early days. And I didn't think that he was going to remember all of that, but he did. And he really does follow the live streams, follows like what people say about Robinhood, how he can end up changing things around. Because I didn't prompt him with any of that. Like I didn't tell him about the Noto interview. I didn't tell him about, me hating his company early on. He knew it all. Another thing that I found very interesting is just whenever I saw him, I thought that he was going to be angry or upset by being on the side of the highway. He was like super jolly. I think it was like the only thing in his entire week that broke the mundane cycle. And so honestly, his vibe coming into the podcast couldn't have been better because of the fact that, he had a little bit of a different day than his usual. Yeah. Okay. Let's see. Okay. That being said, though, let's move on from that. I just really wanted to talk about that story. I didn't want to leak it, but Vlad ended up putting it out anyway. So I thought I'd tell you guys the story. But you'll see the podcast. It was probably one of the better podcasts I've ever had, just because of that in-person experience. And the first time I did an in-person podcast with Vlad, it was one camera. And the people that were producing it kept telling us to like turn and look at the camera, but there's no like, you're not watching a podcast where they're like talking to a camera. They're talking to each other. So you need 3 cameras. You need like a scene where both people are in it, and then you need an individual camera for both people. That's what we had. So it was really, really well produced, this one. I did not mention Webull or eToro or stuff like that. I had a lot to ask about the Robinhood chain, what makes it different, why they're in Canada in the first place, like just a lot of the really new ventures that they're getting involved in, prediction markets, Rothera, all of those sort of questions really drove the interview. Yeah. Let's talk about Palantir and AMD. Well, there's going to be a lot of talk about Palantir and AMD over the next 2 days. I'm honestly super freaking excited. Last week's earnings were phenomenal. Got to learn a lot about the different companies, even companies like Reddit that ended up selling off massively, which is actually having a very good day today, of course, because the earnings were phenomenal and the stock fell like 22%. For real, I think that'll be one of the better buying opportunities in Reddit's history. You're going to look at that. You're going to look back at that and, consider that like early days meta, in my opinion. And I've got a lot more to say on Reddit after that earnings. I listened to the earnings call, went through more of the numbers, actually got to break it down. This is a phenomenal business. I don't care if you sign with the product or you think that it's politically charged organization or whatever you have to say. If you're just talking about, let's break down a business in terms of the revenue that they bring in, the viability of future earnings, to essentially say, hey, how much of a moat can you create around advertising? How much better can you make this business? How much more can margins improve? Does AI replace your company? And all of those things that I'm really trying to look at Reddit through that lens only looks like a better and better business from my point of view. Okay. In fact, if we want, let's do a little Reddit review. I've got a guest joining at 1:30. Maybe I might push him off if I go a little bit longer on this, but let me do my full Reddit review really quick, because honestly, it's, I do want to talk about it while we're on this subject. And I'm just happy that the stock is returning, because, they were buying stock even before, like they purchased $250 million worth of shares at $157 a share. We're under that. And they have like $700 million of more shares to be authorized. So I'm actually curious to know, were they on a buying spree, after earnings down 22%? Did they just, push their chips all in? And potentially that's also why there's some buying pressure on the stock right now, is Reddit buying back its own company. But let me just blow my nose really quick, and then we'll get started on the Reddit earnings review. For the most part, if I ever do these sort of segments or whatever, and you're not live to see them, we do have a second channel that essentially cuts and puts all of these segments together, or sometimes we upload them to the main channel as well. But it's just a way of sort of getting to the, real focused side of the live streams, where, I put in some effort over the weekend and stuff like this to put together these parts, rather than just talking about stock prices and stuff like this that might have only been important in that hour. Okay. So speaking of Reddit's earnings, Reddit Q2 ended up selling off like 22% on the day that they ended up showing off earnings, yet the expectations versus Wall Street ended up blowing past expectations. And we'll talk about that here in a second. But essentially, we ended up seeing about $805 million in revenue, up 61.1% growth year over year. Now, the interesting part about this is if you compare it to the quarters previously, you'd actually see that growth rate is slightly down. But the comp that they ended up showing this growth rate off of is one of the highest comps that you can see, obviously, in the past 3 years worth of history. 77.7% growth rate. So to even put up 61% growth on that amazing quarter is really a true feat. 8 quarters in a row of 60+% growth. Only very, very few companies can end up showing off that level of success. Now, they break this down into 2 different sections of revenue. One is advertiser revenue, which actually has been growing much, much faster than their overall revenue growth. And then the other section, which is other source revenue, things like, buying gold and this sort of stuff within Reddit, grew about 24% year over year. So, but it's also the smallest part of the actual business. So if you're talking about, what's the most important part, it's the columns in blue here, and those are the ones that are growing the fastest, and actually faster than overall revenue. So really good sign here from Reddit as well. They said, I think our business is diversifying across many dimensions that has made it really resilient. If you look across verticals, 11 out of the 15 verticals grew more than 50% year over year. Our active advertiser count grew over 70%, and our scaled channel, which houses mid-market and SMBs, doubled. Rest of world grew 80+%, and so our footprint is just getting way more diversified. Even though they break it out into just showing advertising revenue, the different types of advertising revenue is very important to know that those are diversifying. You're not just seeing, growth in travel or something like this. It's across all different sections in different geographies as well. Gross profit margin was 91.27%, which was actually up year over year, about 50 basis points, to $734 million on $805 million worth of revenue. Really, really strong. They said, we saw margin tailwinds from incremental revenues and hosting efficiency programs offsetting increased use of compute, use of higher AI and ML usage. So although they are pushing, like many companies, to use more and more AI, more machine learning usage, all of this stuff, it still showed end up improving gross margins year over year, which was really strong. In terms of other operating expenses, you have sales and marketing, general and administrative, research and development. All of these are headed in the right direction, going slowly, lowering over time, right? So really, really good signs there from Reddit as well, which ended up showing an improvement. Actually, no, this is stock-based compensation. We'll look at operating profit here in a second. But in stock-based compensation, we saw a little bit of a tick up year over year, and especially quarter over quarter, which they did also say that, this actually had to do with their grants specifically on Q2 that ends up showing up quite, much higher. And they actually lowered their full year expense guidance for, stock-based compensation from high teens as a percentage of revenue to low to mid-teens percentages of revenue. To date, they said that they saw great leverage on this expense and that it's lowered to less than 13% of revenue to date, more than 1,000 basis points or 10% lower than the first half of last year. Now, going to that operating profit and operating margin, another great high here, $231 million, high gross or operating profit margins as well. And then flowing all the way down into net income margin, 31.4%. Great efficiencies on their taxes. This company continues to print more and more money each and every quarter. Now, one of the big KPIs that you end up seeing from Reddit, and this was the thing that shocked me the most about the sell-off, was that people saw that there was a decrease in daily active users in the United States, which, mind you, is not even the first time that this has happened. From September of 2024 to September of 2024 to December of 2024, we ended up seeing a very, very low amount of daily active users end up falling off. This is the exact same thing that happened. Mind you, we're now 5 million higher than the last time that we've seen this, while international users has just continued in this sort of linear increase over time. Reddit sold off on this sort of sign here. They said, we did see headwinds in search referrals, particularly late in the quarter, which just happens to line up with the talk of them, potentially selling data to Google. So is Google sort of, fighting them back with their algorithms? Who knows? And they said that the visibility with the referral traffic remained low, but we're focusing on what we can control, which is our direct user driven by product efforts. We believe that this work will be transformational. It'll take time, but that's how we get to 1 billion global users and 100 million users in the United States. And they're talking about daily actives, not weekly actives, daily actives. Now, the thing that really surprised a lot of people was the big, big increase in average revenue per user on Reddit. Well, we ended up seeing this large increase in users in international markets and sort of a flattening, however, still up year over year on US consumers. These are like the two S curves that are growing together, right? If you have more users over time and those users are, spending more through advertising on Reddit, that's really what's going to show up as being, the greatest sign of creating a moat. Now, one of the ways that they do this, they end up saying that research from different firms ended up showing off that Reddit is delivering 1.5 times higher return on ad spend for consumer packaged good advertisers than any other social media on average across the United States and Western Europe. 1.5x. Okay. So whenever you're looking at daily actives across both Europe and the US, like sort of their international and everything, you're seeing daily actives now at 130 million. This is what brought the stock down 22%. The truth is that even whenever you combine both US ARPU and international ARPU, meaning average revenue per user, it still climbed to new company heights, which is very hard to do a quarter after Q4. Like you see back here in 2024, that did not happen. December was $3.42. It took them, multiple quarters to then get back to that new height. They immediately beat Q4 2 quarters after, the holiday spend highs, which you can see are sort of the peaks each year. So if that's going to be the peak and we end up increasing for the rest of the year, we're likely to head into the $7, $8, or even $9 by this holiday spend if they can continue to improve their ad platforms, right? So whenever we even look at weekly actives, this didn't even decrease for overall US based. That continued to increase. Remember, if the stock stayed flat or something like this, maybe you go, it wasn't a blowout quarter. You could point to things that maybe you didn't like in the stock price or in the company's performance. But to drop 22%, you need to find some glaringly red and obvious, signs from the company that this company is not the same thesis as what we were at before. That is not what we're seeing at all. We're seeing daily actives increase 18% year over year. Weekly actives increase 24% year over year, while ARPU drastically increased across the entire company. Okay. They also said Max campaigns, which is their new products that they end up pushing out, are proving to drive better performance for advertisers and higher lifetime value customers. For example, Lenovo achieved 40% higher purchase volume with Max than with the standard campaigns, demonstrating how AI-driven optimization can turn high-intent users into high-value customers. Looking ahead, we plan to expand Max to the broader range of advertisers and make it the primary onboarding experience for SMBs. This only right now is just coming out of beta, and they're already seeing amazing success with it. Look at this. The number of advertisers using Max grew 60% from Q1. 60% quarter over quarter, while Max revenue grew over 150% during the same period. We continue to add capabilities to the Max suite. In Q2, we added that app install objectives to Max campaigns and launched tailored creatives, which use AI to identify relevant communities and audiences. So they're improving their side, which is also why they can charge more for advertisers, right? And just like we saw from the previous experiences, if you're getting 1.5 times higher return with Reddit than other social media platforms, then they can charge a lot more for those experiences. They said, when you look at the volume of conversions growing and clicks growing, what that means for an advertiser is that they're getting more outcomes at an equal or even better price. We're getting more competitive with all the signals, ML work, and optimization work that we're doing. And so the amount that they can charge, like we said, and the amount of customers that are going to keep coming back is only going to improve because all of that data flows into better data for the future advertisers, right? It's what made Meta such a big company. And yet their efficiency in this business is only going to allow them to do this even more. Their cash position is dramatically higher than where their debt is. You might as well say this is a debt-free company at only $20 million. They could pay it off. It wouldn't even make a single dent. This is probably, 0% interest debt. And so that's why they're not touching it. But for the most part, what you end up seeing is that the cash ended up only slightly increasing, about 16 million. Still a very, very good, cash position. But they said, we have the liquidity and cash capabilities to satisfy our 3 capital priorities, which was first, investing back in the business. Second, opportunistic M&A, mergers and acquisitions. Can we buy an advertising company that might be way oversold that can help us grow our business? Or third, just repurchase shares while maintaining a high level of profitability. And so that's exactly what they did this quarter. $250 million was put back into the business to lower share counts while the stock had remained depressed. Now, after earnings, the stock ended up falling on this news, down 22%. So what do you think they're going to do with that 700 million authorized amount that they have? Massive cash position to end up utilizing that. And obviously a very high free cash flow business, right? At some points in this business, we've seen as high as 47%, free cash flow margins. This quarter was a little bit lower, which did end up affecting the stock, but that's not where they want to be long term. This didn't end up going into, CapEx or anything like this. CapEx actually represented 0.2% of their total revenue base. So all you're seeing is the efficiencies of this company improving. they're now seeing on a last 12-month basis, their average employee ends up bringing in more than $1 million back to Reddit. On the other side, operating expenses have stayed mostly flat over that same year period. This is the efficiencies that Reddit is sort of seeing. And so one of the other things that I wanted to talk about was guidance, right? Q3, they ended up showing off that they wanted to get about 48% revenue growth, 865 million in that mid-range, at a 45% adjusted EBITDA margin. This was another thing that people pointed to and said, hey, you just did 8 quarters in a row of 60+% growth rate, and now you're telling us that next quarter is only going to be 48% growth, right? On not as hard of a comp. And so this actually ended up spooking people saying, yeah, but the company is expecting to start slowing in that growth as they mature, right? That would end up showing that they only do about, a little bit higher, and that falling of growth just doesn't look very good. But look at last quarter. This is the interesting part. They have beat expectations every single quarter. This is a company that is known for sandbagging. So look, we're not seeing 2% beats, 3% beats. We're seeing 10% beats, 9%, 17%, 11%, 11%. On EPS, how much earnings they're going to bring in, which is tied a little bit to adjusted EBITDA as well. They beat by 30%, 74%, 550%. So trying to guess how much they're actually going to make has also been, completely inaccurate as well. Last quarter, this is exactly what they did. They ended up saying that they were going to grow by 44%. They said that they were going to do 40% adjusted EBITDA margins. This was their outcome or their outlook for Q2. They said 715 to 725 million. If you remember from the beginning of the video, they said they did 805 million. They were completely off. So that 44% guide turned out to be 61% growth. Okay. That 40% adjusted EBITDA margin ended up being 42.6% adjusted EBITDA margins on a way higher amount of overall revenue. So this company is sandbagging like crazy. I would not look at their guidance and say, hey, this is a sign of weakness. I would say, how much are they going to beat by this? Because that's exactly what we've seen in the 8 quarters going previously. But yet, even whenever you look at the valuation of Reddit, what you're buying into is a company growing at massive growth rates, past 8 quarters in a row, continuing to sandbag, improving ARPU, and launching new products that are seeing the best benefits to the companies, like their Max campaigns, ever in Reddit's history. And you can now buy this company at essentially a 32 times PE ratio, or even lower on a forward basis, which, by the way, forward is what Wall Street is currently assuming. Like I showed you, Wall Street was assuming roughly a 48% growth rate on revenue, when likely, they're more than likely to end up beating that number. So if the margins end up improving like it did last quarter and the growth rate also improves, what is a forward guidance overall? If it's way sandbagged, this number in reality could be somewhere as close as to 16 times, potentially even lower if they continue to beat the way that they have in previous quarters. And the same can be said about free cash flow. Free cash flow 26 times on a trailing basis. Forward price to free cash flow 17 times. 17 times for a company that has grown massively, improving margins, improving revenue, beating everyone's expectations across the top and bottom line. And you can buy this company at 17 times price to free cash flow. This company is mispriced. Okay. There was a long time where you can look back here and say, this company is expensive, but it's growing quickly. But now it's growing quickly and it's no longer expensive. That is the best opportunity whenever it comes to investing, is whenever the market says something has to come down, and it obviously does not end up slowing down in its growth rate. More users are using it. ARPU continues to climb, and they're actually getting better and better at doing so because they get more data from their new customers that are coming on the platform. I'm loving Reddit here. I'm absolutely a buyer, but yeah, you let me know what you guys are doing. All right, let me go ahead and send out the link for our guest, because he should be coming on here any second. But I'm curious what you guys think about Reddit. I freaking love Reddit. Not the product. I don't use it that much. Sometimes I'm on the, Whoop subreddits or something like that. ARPU, average revenue per user, ARPU. Reddit is a great stock. I mean, in my opinion, like if you can identify a company, like for example, Palantir, and you like that growth rate, which is exactly, I think, a similar thing that of what's going to happen today, where we end up seeing a company that the market is selling off, but earnings continue to beat over time. The company does not get cheap just based on earnings if the multiple is also falling, right? You have multiple compression in the stock while beating earnings. The company, like, if a company's PE, the way that Palantir did, got cut in half, but the stock is growing 2x year over year, it's getting like 4 times cheaper than where it was back whenever it was $200, because the revenue is twice as high, the earnings is even more than twice as high, and yet, you can get it at half the cost. But I'd like to know if that Palantir assessment holds up with my next guest. Ladies and gentlemen, please welcome the great and powerful Roy Crossroads.
All right. Thanks for having me on, Tanner. Sorry for the ultra low quality setup. Chatting in from work on the lunch break. So,
All good.
yeah, no, I'm excited for tonight. This is your first time, other than years ago, holding through earnings for Palantir, correct?
Yeah. And do you know my anxiety for this is like, I mean, zero.
Yeah.
Like, I can't tell you how confident I feel.
Yeah, yeah. I did earnings projections and I was looking at a lot of different things. And after my projections, I kept looking at like, I might actually be bearish. And I have them coming out with 84% year-over-year revenue growth.
Yeah.
So, I mean, like, I don't know if you saw this, but I'll show you this real quick. And then I'll show you like one number that just kind of insane. I mean, there's a lot of insane numbers. We know that the report's going to be good. Markets are not expecting this kind of growth. It was 85% last quarter, of course. I don't think the market will freak out if it's 1% lower because 84% year-over-year growth is not slow. Their free cash flow is 1.15 billion, which is that's what I'm projecting to be. I think 1.1 is the projections. EPS 38 cents. Net dollar retention, which we can talk about that, 158%. But yeah, 84% year-over-year growth, 1.85 billion. Lots of new contracts, lots of growth internationally. Margins look good as well. This course is from Fiscal AI. Like the most astonishing thing to me is this gross margin profile has only increased over time. And
Yeah.
usually when you see revenue just tear like that, it's because the strategy is let's take less in terms of margin to just win market share. And Palantir is doing the opposite, which is
Yeah.
just like insane.
Yeah. And yet the two comments that we've heard from management is that revenue is going to potentially grow at triple digits over the next year, and that the free cash flow that we heard over the next 2 years is going to be 15 to 18 billion, which is not a sign of contracting margins at all.
Yeah,
And
they
it's the best metric.
so they oh let me show you that. This one's really fun. Actually, I think I saved it on my port. I've been posting a lot about Palantir over the weekend. Their free cash flow versus, well, yeah, I'll just let me reshare the market and we'll look at a couple of these real quick because they're all fun. Okay, that's the report there. Okay, so this is the debt versus the balance sheet. Well, the debt is zero. Free cash flow, I mean, just look at that. And so they're going to hit $10 billion on the balance sheet with no debt
Yeah.
in 2 quarters. That's crazy.
Yeah.
This is one of those where I was kind of thinking maybe I'm actually being bearish with 84% year-over-year revenue growth. This is a 40%, almost 40% increase from accounts receivable in just 1 quarter. That's actually really kind of insane. And beyond that, okay, yeah, here's the margins. And so we can see operating margins, which of course would be going up as they are more and more profitable. Gross profit margin is just on a tear, while total revenues are like, that's almost unheard of. Like, this is a generational company. And
Yeah.
then, oh, maybe I didn't do it. Okay, let me pull it up real quick.
Let's build it.
Free cash flow, and let's do revenue. Total revenue. And let's do quarterly. And let's add in the projection one time. So we see free cash flow here. Analysts expect on average it's going to come in at with 1.109 billion. Do you see the revenue that they're comparing against?
A
Their
billion.
free cash flow is projected to be higher than their revenue was 1 year ago.
Yeah. That's a special kind of company.
if it was like 100 million, it'd be like, well, small numbers. When you're talking about a magnitude of $1 billion,
Yeah.
oh man.
Yeah. You know what used to be the comparison is like, I remember Steve and um, maybe Chris Patel as well, like talk about whenever Palantir was growing to 100 billion, 200 billion, $300 billion worth of market cap. And you'd compare it against Salesforce as it was sort of passing that market cap. And you're
Yeah.
like, okay, one company does billions and billions and billions of dollars. This one's doing hundreds of millions. Like they
Yeah.
can't be compared. And now, as you start to hear the projections for where Palantir is going to go, the 15 to 18 billion dollars in free cash flow, those comparisons are no longer made because they actually start to look very, very comparable.
It honestly, like with the numbers and the estimates out there, last quarter I didn't think so, and Palantir still smashed the numbers. But like looking ahead, the numbers actually are very conservative for analysts. They don't look like it, but if you look at
Yeah,
what the company has actually done, what Alex Karp has said, and again, if Alex Karp was just making empty promises and breaking those left and right, you take it with a grain of salt. Instead, it's been the opposite.
yeah,
So yeah, like the price could do anything tonight. We obviously we're down year to date still 25%. It does take a while. Like you zoom out 3 years, and this company went on just a ridiculous tear. It never deserved to be trading up here. I said it myself. Amit, it's probably the biggest Palantir bull, said it as well. It's undeserved, way too far ahead of itself. Not that we sold, because again, we're long-term investors. We're looking out at 10 years. We knew that this might be the reality. Now, I'm not saying it has to be this quarter or even like this year, but I do think within the next 12 months, you're going to start to see more premium be delivered just because if you look at some of these multiples, like one of those that we could pull up and do, and I don't know how deep in the weeds you want to get there, is if you look at how Palantir has historically traded against itself, that could be a useful measure as well. Like specific on the free cash flow measure, price to free cash flow, the forward price for free cash flow is looking very attractive.
mm,
If you see it dip under 40 from this earnings because of both the report that they generate with the massive amounts of free cash flow and also if the stock ends up falling, man, that is a buy every single day. I think it's fair value in this range. I don't think it's like a screaming buy and it's cheap. If you're looking at 10 years, like I think it's a really good buy. But it's hard in the market when, silly things like last week, CoreWeave briefly went under $60 a share. It's like,
yeah.
okay.
But that crazy volatility, if you're a net buyer in the markets, is only good.
Yeah.
Like, if you're looking to sell and you have redemptions and these sort of things to pay for your lifestyle, those sort of volatile stocks can be extremely scary to hold on to. But if you
Yes.
have cash and you're going, okay, well, I want to build a long-term position, then a massive amount of disbelief is great because the alternative is, what would you prefer? You're a net buyer of CoreWeave and it went up to 185 and just held that range until it got to fair value? Like that would not be a good buy. The better buy is, hey, let's get these opportunities to buy at 60 and then it gets past $185 or whatever the all-time high is later on.
Yeah. And like going back to Palantir, like I started buying this in January 2021 and it was like 25, $28 a share. And of course, 2022, the bear market came and it went down at one point slightly below $6 a share. My largest buy was at $6.20 or 30 cents. Yeah, it felt terrible at the time, but honestly, the market gave a gift because I would have been buying Palantir anyway, but I would have had probably a third the size of the position without that contraction. So,
Yeah.
yeah.
Yeah. What else are you looking at in the markets? How did you think about SoFi's earnings? I don't think we spoke much after the actual call.
Yeah, they were really good. Stock, it's nice to see it moving in the right direction, along with a lot of stocks on the market today.
Yeah.
My main portfolio is up 10% right now, so it's like, all
There you
right,
go.
that's nice. One of my smaller accounts is up like 15%, so it's heavy core weaves.
Yeah.
It's not been fun, and I'm still probably down on my average stock price. But yeah, so SoFi itself, extremely impressive numbers yet again. We had the projections. Like the most impressive thing, of course, was their willingness to raise guidance. And no, it was not raising EPS guidance because again, that the tax figures, but raising revenue guidance into the unknown of whether or not the Fed would raise rates immediately like that afternoon. They could have.
Yeah.
33% of, if you were looking in the predictions markets, it was a little bit lower. But if you're looking at CME FedWatch, 1 in 3 chance of them raising rates. And SoFi's like, and so like beforehand, Tevis and I talked, and I talked to other SoFi folks, and I think you were of this opinion too, that there'd be like no way that they'd raise guidance, but if they did, that's the most bullish thing ever. That's my
Yeah.
read on it. All the
Yeah.
numbers are good. Consumer is very healthy. That credit cards have resumed a lot of that smart cards. It's a great environment. Now, I would have liked to see more growth out of financial services, and tech platforms surprised me on the upside. It's disappointing still, but it is easy to lend out money, but they're doing this with long-term goals. They can't do quarters like this that are so skewed towards lending forever, but they can for a while. They have a lot of cash on their books. So, yeah, very impressive set of earnings. We'll see what the stock does the rest of the year. What did you think?
Yeah, well, no, I was just gonna tag in with what you said, right? The lending revenue can't continue, but it's also the driver of future revenue. Like,
Yeah.
uh, the lending earns money over time, which then allows them to end up compounding their tangible book value and everything like this over time. So, as long as they end up getting it right, if they assume that they can find consumers that are going to pay them back, but that seemingly is the case right now.
Yeah.
So, it may actually accelerate their outlook even faster if they do get it right. We could see a lot more beat and raises if they do more lending.
Well,
Um,
and I do love that the guidance was with 2 rate hikes through the end of the year being the what they were expecting. And so obviously, if less
from two
happens
rate
there, it's great.
cuts.
Oh yeah, yeah,
Like
yeah.
it's a four it's a four cut or 100
100
basis
basis
point
points.
move.
Yeah,
Yeah.
yeah. And that's actually insane that be raising guidance into that. So
Yeah.
yeah. And this
That's
is a
wild.
conservative company. Like it'd be one thing if it's like Hims, which is like known to guide very aggressively and sometimes miss. This is SoFi. They sandbag. And that how much do they sandbag? Well, 4 cuts. No, excuse me, 400 basis points difference in expectations for rates, which weighs heavily as a lender. And they're like, we'll raise anyway. Man,
Yeah, the market is freaking up today. Nasdaq up 2.15%, S&P up 1.43%. A lot of the names that we talk about here are up a ton. Air Test Systems up 11.8. Congrats, Roy. That's awesome. What else do we have? Even Fundrise is up 11%. But actually, Fundrise looks a lot better here at 36 than it did at like, what was it, $200, $500, or what was it? 575 it got to. That's so
that's
ridiculous.
crazy. Yeah, you have to look in the energy space for some red names. There's not many of them.
Yeah, no, exactly. I
Oil and
just ended up
gas.
covering my thoughts on Reddit. How do you feel about this name? You cover it at all?
I've looked into it some. I think it's probably like Meta for me in many ways, where I don't like I do use some Reddit. Like it can be very useful, and a lot of people find value in that. I think that the way that they're positioned as a company, and with how you can like look for yourself and go into Gemini, go to ChatGPT. It uses Reddit as a source just constantly, and
Yeah.
so what they have is very valuable. It's not trading at a ridiculous premium by any means at all. I think it's a very attractive investment, and yet I also really don't like the core product and what they stand for. So I don't think I could be an investor. I have less reservations about that than I do with Meta, but yeah, that's just kind of the way I see it.
Yeah, I mean that's fair. Yeah,
And I heard,
I think their free cash flow and business is growing. And like
oh
I
man,
said,
yeah.
I'm not as picky on the morality side or something like this if you don't
What?
believe in their product.
I heard direct quote from you that you love Reddit, and I'm going to take that to mean you love the platform and you no, just messing with.
No, no, no. I said I don't actually use the product too much. Like there are some communities that I check in on, but some of the front page
Yeah,
stuff I absolutely do not like. I do find it a little bit like, they say it's for both sides. It definitely does feel like it's leaning to one side. But
it's skewed, and I think that's by intention. But whether it is or not, yeah, as an investment. Like, and I don't think it's wrong to like think one thing about the product, but also see that it's investment worthy and do that. I'm not judging you, Belts. I'm just saying how I kind of look at it. Although, again, like it does look pretty attractive. Same with Meta. Just I think the market is on the wrong side of this, but I'm also not going to be a buyer. I'm just going to buy more CoreWeave.
yeah, yeah. So CoreWeave, it's funny, even on a day that's up 16%, sometimes people can see these big moves and get a little bit like, oh, I missed the great buying opportunity. Sometimes you have to pinch yourself and remind yourself that this is $83 and that on the way down, this was a screaming buy. And then, even lower, it got like, oh my gosh, that, buying it. It was scary as it goes down, but once it comes back up, you realize how great of a buy that was. But at 83, this is still drastically cheaper than even whenever I first bought in at 105, which seemed extremely cheap.
Yeah, I was buying the 95 to 105 range like heavily. I bought into the 80s and then I ran out of money where it's like, hey, I have to sell stuff if I buy more. And so that was the worst and most frustrating thing. And it can be for retail when you've allocated what you're comfortable allocating. You don't want to take on margin. You like everything in your portfolio, so you're not eager to sell it. And yet you're seeing that share price go from what you thought was a screaming buy to just screaming. And you're like, why can't I have money to buy more right now? So.
Yeah.
But no, like it was. I'm sure we're not out of the woods as far as like this narrative that's overhanging core, even some of the other Neoclouds. But like today, it certainly feels like it is. And the funny thing is, yeah, people will look at this just because of the move, which is substantial off of the $60 price range, and like you said, say, oh, it's too expensive now.
Did you see the Morgan Stanley report on where they think CapEx is going to be in 2028?
I did. I know it's over a 1 trillion, 1.2, 1.4. What was the?
Sorry, no, I think you are correct. I think it was 1.4 trillion, but I did not frame my question right. I'm pretty sure it was actually just for Google.
Okay, I don't know that I saw that. I have this from Wall Street Engine that has just the overall. What's the Google's?
They had Google's CapEx for 2028 at over 500 billion.
Wow.
Yeah. $125 billion a quarter in CapEx. Is this the one here?
Yeah, well, this doesn't have it has just the Alphabet CapEx raise specifically, but yeah, the overall 1.4 trillion. Morgan Stanley
That's
is
for
above
2027,
consensus
right?
now. Yeah. Oh, so you're talking about 2028. Okay.
Yeah.
That makes more sense for the Google numbers. It's insane, but do you think what are your thoughts on that? Like I did a long article on like the hyperscalers and the data center, specifically CapEx opportunity that they're seeing and different reads on this. But as far as the capital raise, is that going to be, you think, a combination of like corporate bonds and dilution, or like what vehicle do you think that they're going to primarily use? So we could just talk one name if you'd like, but
Dude, I've got no clue. I'm not thinking that far ahead in terms of how they're going to actually be raising the money. There's smarter people than myself. What I'm worried about is where's this money going, and that's likely into the hands of companies like Broadcom and Nvidia. And then the different components, like I think Lumentum's going to do very well, and Vertiv, and what was the Micron, and a lot of the memory names, especially the percentage of CapEx that's going into memory. I think memory might be one of the more screaming buys. If AI spend continues, there's no chance, in my opinion, that they are priced correctly. If you're saying Lumentum is priced correctly at like 100 times PE, that a company at 5 times PE is worth the same.
well, I mean, like they're in different stages. So silicon photonics is just beginning to heat up. So those are going to have a higher multiple as long as the market believes that narrative than the memory makers. But yeah, I agree. Like memory is cheap right here. Did you see what Apple said with memory specifically?
What stage?
Okay, yeah. So the quote from the earnings was, "We paid more for memory in the March quarter than the December quarter. We expected to pay significantly more in the June quarter than the March quarter." And that is what happened. It was partially offset by the benefit of carrying inventory for September. We expect to pay even higher memory costs. Like it's just,
Yeah. They raised a lot of the prices on their consumer products. Well, I mean, all their products are consumer products, but yeah.
memory's probably not going to zero.
No, I mean, like I think Jensen said that we might be like he said that this is not a bigger cycle. This is like a different, like this is a transformational change. It's just a matter of if you believe that, or if he's talking up his own book. The interesting part that I find is that it's all layers right now that are saying the exact same thing. The Michael Burrys and these sort of people who also have a narrative, by the way, are saying opposite. But it's not just the producers of these products that say, "Hey, our customers are going to come out and buy our products." The purchasers, the Elon Musks, the Sundars, are saying, "Hey, we're going to be buying significantly more than what we did the year prior."
Yeah.
You know, whenever the
Yeah.
customers are happy and they're ready to spend, it's likely going to happen.
Yeah, it's almost every single person that's connected to that supply chain is seeing the exact same thing. And you can say, well, it's just groupthink, and it's not. I think one of the better reads, it's not specific with memory, but it is what's happening in the AI space in general, is TSMC. And of course, they report early, very, very early. They've already reported, and they're a very conservative company. You may not think it like with the business that they're in, but their CEO, I can't remember his name right now, but he talked about this a couple of quarters ago where there was questions about because they had accelerated their capex projections because they're like, hey, there's a tremendous opportunity here. We're not able to meet demand if we don't do this, and it's necessary that we do. And he said, we're very cautious with this, and we understand the skepticism, but we've talked to our customers. We didn't stop there. We talked to our customers, and even further down the line, and they were all basically saying, oh no, yeah, demand is just through the roof, and it is where it is. So they're like, okay, let's build. That's a conservative company. When conservative companies are like, hey, we have to raise capex projections and we have no choice but to do this, and they've done their due diligence, like, okay.
Out of the Mag 7s that have shown off their earnings so far, so everyone but NVIDIA,
Yeah.
who surprised you to the upside the most, and who surprised you to the downside the most?
Downside is pretty easy. It is Tesla. The margin specifically on their vehicles, like that was a surprise just to see that fall. I'm out of Tesla. I think that you are. I know that Tevis is. There's a price where I'd be interested in getting back in, but we're not close to it yet.
What's your price?
It has to be under 200. I don't know the exact price, but when we start getting closer there, I'll be
under two, like in the hundreds, or like 190,
like 180, 190. Yeah.
Okay.
It's it's more for like the robotics, like long-term opportunity, but you have to weigh the risk and reward. And there's still a lot of reward even at this price level if things go right, but there's also no guarantees on the timing and how long that takes, and it might be an opportunity cost for a while. But on the upside, I'd say Microsoft. I think that Microsoft, there's a lot, markets are complex. What drives a market is also complicated. But the moment that Amy Hood, the CFO of Microsoft, came out and said, hey, we are going to be free cash flow positive all through our financial year 2027, which is over the next 12 months, that's when the markets began to rip, not just for Microsoft, but for everything connected into that AI trade.
Yeah.
I think the market still doesn't understand how important the CapEx is. It still doesn't understand the ROI there. And I think Meta was the only one that really did a very poor job of demonstrating that. I think all the others did fine, if not great. But yeah, Microsoft, time and time again, between ROI, between the projections. Now they lowered their CapEx by 15 billion, but that was largely an accounting change. It wasn't because of that they're bearish or they're changing or anything like that. But Microsoft just killed it. And I think that they really saved a lot more pain that might have been there in the trade. What did you think?
Well, you know what I think a lot of people look at Meta and they essentially are assuming that all the spend is just going towards nothing. Like you can compare it against Reddit. They're growing significantly. They have, their percentage of capex to revenue is 0.2%. They did like $1 million in capex. There's nothing. And so whenever you have a company in the exact same space, the social media space, advertising is growing by 70%, they're putting a lot of it, like they're spending a lot on compute. They're just not doing it in-house. I think people wonder, do you need to spend all of this money? I think the part where everyone's getting wrong on Meta is if they get this wrong, the opportunity to create a new business called Meta Compute Cloud would be tens of billions of dollars, Roy. I can see you questioning. I want to hear what you...
Oh, okay. Yeah, that was a piece that probably surprised me. the most out of all the hyperscalers was that. I was expecting that Meta would come out, and if you want to throw this up, you can.
Sure.
This is, well, let me just click on that. This is from the Artemis article where I talk about the earnings from all four hyperscalers and what they're doing in this space. But we saw, other than the one accounting change with Microsoft, raises across the board. But the smallest raise was Meta, 5 billion, and just to the bottom line, not to the top line. And that shocked me, the way that they were talking about this opportunity in data centers. And yes, it was supposed to be excess capacity, but I'm like, okay, if Zuck actually believes this and he is not shy about spending, they're going to come out and they're just going to, I don't know, like raise by 50 billion maybe? Like who knows? And instead they do this.
And I think the stock's already hurt. I don't think that they can pull the levers that Microsoft and Google can. Google just, raised 85 billion. If Meta goes to raise, even just the rumor of them raising killed the stock. So I don't think they have the levers that a Microsoft does. They're still doing buybacks. They're still cash flow positive. Like there's so much more that they could pour in. But it's still a lot of CapEx relative to their revenue comparatively to the Microsofts and Googles.
Yeah. Do you mind if I throw the link in the comments? I don't get anything from it.
Sure.
Like for clicks or anything, but it's if people want to see, well, it said it is failed to post to future investing. Oh well.
Are you
Yeah.
Are you a mod? You should be modded.
I'm probably signed in the wrong account or something. So
Yeah, you must be, because I think mods can post links.
yeah, I'll put it in the private chat. And if you
send
wanna,
it to me.
if people ask about it. But yeah, it goes through it, and I've got a lot of like comments in the earnings from each of these. We talk about CapEx. We of course talk about ROI, which is a big deal, and free cash flow. And I do think like so Meta did. It's kind of funny because if you look at the comments itself, if you listen to Zuck as he talks about this opportunity for their entire business as it relates to AI, not just on the CapEx side, not just on the data center, but certainly Meta Compute seems pretty bullish. His read was actually the most bullish on like the data center trade out of anybody. And yet they're not investing like, and I think it is like you said, like they understand where they're at in terms of narrative. And if they did come out with that 50 billion raise, we would have, I don't know that we would have had another Meta moment where you see like the PE collapse under like into single digits. Even at that point, like I'd probably be like, okay, I know I don't want to be invested in Meta, but I also want to make free money. So let me buy some call options here, baby. But his read was incredibly bullish. So like, what do you think, like going forward? There's a couple more products that they alluded to launching or announcing soon. I think that these will be very interesting. I do think that they have some really good opportunities in this space. But do you think that over like the next, like through the end of the year, the next two earnings, that they're going to tremendously increase their CapEx spend, or are they just going to be cautious, do what they can do to capture this opportunity?
I think that for Meta specifically, that investors are going to want to see some form of return, whether that's through Meta, Muse, Spark, or the compute side. I think either one's fine, but just bringing it through advertising revenue, I think people are looking at their competitors and saying, okay, well, how's Reddit doing it, or how's X doing it? Like, without putting in $100 billion, you're telling me that you're you need to have your engineers token maxing so then you can grow at 28%. So I don't know. I think that there will be a little bit cautious unless they can find a new stream of revenue in which will allow Mark to really ramp up that CapEx. Yeah. I think Google's going to be ramping up. I think AWS is. Honestly, the one that surprised me the most was Microsoft, and I'm actually a little bit cautious. I know that people got very excited about it, but I just don't understand how they can possibly compete against the Googles that are throwing everything at this problem. And then another company that would be a little bit more conservative on the CapEx, like staying free cash flow positive. It just doesn't, I don't know how that math works.
Yeah, I mean, like I would say this, like going back to those numbers. So previously, Microsoft said 190 billion was what they planned per their prior guidance. They lowered it by 15, but it's because of the way that they're accounting for the build out of the data centers. So it really like the number doesn't change any at all. Like it changed, but there's no difference there. So essentially, they just said, okay, we're good at 190. Google raised by 15 billion, so that brings them to a 195 to 205 range. So I'd just say like Microsoft probably did more on the front end with the capex. They're like, hey, this is where we're going to be. This is where we
Sure.
expect to be. The only thing that does surprise me a little bit about them not or decreasing it by that amount due to the accounting change and not just saying, well, accounting change is going to save us 15 billion as far as the way that this looks, but we're raising it by 5 or 10. Like the memory costs, that's a factor that's substantially more expensive right now. And so it is a little bit strange that they didn't, just offset that a little bit more. But
But who
yeah,
knows? Like you never know too, especially with companies like the difference of OpenAI and Anthropic. They look like they're doing the exact same business, but one had secured a lot more compute early days, and now another one is playing a little bit of catch up because they got way more popular extremely quickly, and so they have to go to the SpaceXs and all of these things that can affect their unit economics. So maybe Microsoft had secured long-term contracts with memory players long before that became the popular thing. So individual management can change the unit economics a ton depending on the decisions that they've made early on.
oh yeah. What are your thoughts on CoreWeave specifically? Because I know that you're a fellow shareholder as well. Did anything shift negatively or positively in your mind from the hyperscaler read or anything that's happened over the last month,
Not on the
other than the price?
hyperscale read. I think that was positive for CoreWeave. The thing that shifted was the sweetening of the debt. I don't want to see that.
Yeah, no.
Um, we're going into an environment that people are calling for almost certainty of rate hikes, and you're having to sweeten these loans that could also get even more expensive. Um, One of the signs that I did see, though, Microsoft saying that their data centers, maybe it was AWS, their data centers used to have a lifetime of essentially 15 years. That went out to 25 years.
Yeah.
That's going to be a standard that is found across the entire industry. And I don't think like, you know what I
Yeah.
mean? For the core weaves and the Nebuses, while the chips might have depreciation over 6 years, 7 years, whatever that we find it out to be over the lifetime of these chips, the shell, the land, there's going to be so much reusability of a lot of the expenses of CapEx that I don't think people are taking account for. I think everyone's saying, the spend that's happening this year, we're going to have to redo 6 years from now. And that's not entirely true. You might have to redo 60% of it or something.
Yeah, no, it's funny that there's still people that think 3 years is the life expectancy and span of these data centers. I'm like,
That's the Burry
okay,
commentary.
you're not paying attention. Like if that's the case, yeah. Well, he like did signal some things, which I think generated some very good commentary on like specifically depreciation. That was something that was being extended by the hyperscalers, and he's like, hey, this is just accounting. It's fiscal engineering. It's all, but looking at the NVIDIA's products, looking at how well they've aged, especially with the CUDA software there, making them just incredibly efficient, plus the demand. Like it's actually right and proper that they extend that depreciation cycle out. This, by the way, I threw up this in case somebody was curious on the sweetening of the debt. When you have to offer higher yield for your bonds, that's not a good thing. By the way, it's also happening in hyperscaler land. Gordon Johnson, which he's not my favorite, but he posted it from Bloomberg as well. It noted this is happening with hyperscalers, and we might just see this kind of across the board. But it's one of these things where, on the other side of this, it might be a very good season for lenders if there's more and more demand. They're having to sweeten these pots even more, as long as they're not expecting a default risk, which I don't think that there is with CoreWeave with the take or pay contracts. But you still like this eats into their margins, so you prefer not to see that.
The thing that blows me away with CoreWeave is like, people cannot put into perspective how small of a company CoreWeave is, being backed by the largest financial institution in the world. like to have such a cosign by NVIDIA. Personally, I don't think NVIDIA will let CoreWeave die.
No.
I mean, at worst comes to worst, they'll buy the business. Like
Yeah.
there's not many companies that can and pay in cash, from a quarter worth of earnings. But NVIDIA does have that type of ability.
And I think not just NVIDIA, I think the United States government as well. CoreWeave is positioned mostly in America, unlike the
Yep.
two other main Neoclouds. Now you could throw
That's
Oracle
very
in
true.
there
They're
too.
very American.
Yeah, and like it's just like, okay, this is a company where it has something that the market needs. It's insane demand. So demand's not going to be a problem at all. And then you have the largest backer, like NVIDIA, in the planet, and they have a very close relationship because, again, unlike the hyperscalers, they're not trying to create their own ASICs. They're not competing with NVIDIA. And so they're the first in line, along with some of the others, like Microsoft and so forth, with the Vera Rubins. They were also the first to actually have that validated and up and running, Vera Rubin. The first to actually have real specs on these instead of just the white papers. So many firsts for CoreWeave. People are like, oh, this is a company that it's just a bunch of accountants and financial engineers at the top. You know what? You need that. You need that for the supply chain logistics. You need that for the build out. You need that for the hedges with the memory pricing and stuff, which is one area of weakness for them that I would like to see them mitigate against. But you also have seen them just execute time and time again with this build out, mastering it honestly better than pretty much anybody at this size and scale in this space. One campus had one delay, one time, and that was it. And just time and time again, like they've got the supply chains lined up, they have the take or pay contracts. They were well ahead on that before people saw the merit of that. They're linear out against that known established revenue. And is everything perfect with CoreWeave? No, of course not. It wouldn't be trading where it's at if it was, but man, the market has this one wrong. So it's still a screaming buy in my mind. I'm just doing less screaming because of the share price these days. But
yeah, yeah, it's that's always what I feel like I'm doing here on the live streams. I don't often just talk about what's going up. I find I'm honestly focusing on what I'm buying, which is the things that are always down. So I feel like I'm always screaming about NVIDIA whenever it's, well, today it was under 200, or not, I don't mean specifically today, but I mean like in this range, under 200s when I'm screaming about it. But, during DeepSeek, the first DeepSeek moment, I was screaming about it at 88. I'm not necessarily screaming about NVIDIA at 240 whenever, everyone's in love with the company. And I constantly feel like you're almost focused at where the fires are because that's where the buying opportunities are, not necessarily just your holdings. And I'm sure that was true with you too, holding Palantir at 207. It's like, okay, well, not every video is about Palantir. You're making videos about, whatever's down at the moment. But the portfolio is still being represented by the Palantir at 207. And that's like the weirdest thing about the game that we're playing.
yeah. Yeah, no, it for sure. And people, when you don't talk about something for a while, people start assuming you sold it or you're. It's like, no, it's the same play. And yes, there's things that have changed a little bit, but I like to speak more into where I think that the market has it really wrong. That doesn't mean I always get it right, but I think that that's where alpha is if we can find this moment. So
yeah,
but yeah, it is for NVIDIA a little ways out from earnings. Is this just going to be a stable coin forever, or are we going to see some helium by the end of the year?
I mean, I'm still 250, above 250, calling that. I can't understand how, come this earnings, they will have the most free cash flow than any other company ever in existence, beating out Apple. That'll be the first quarter that they really beat Apple's highest ever, not this quarter's free cash flow, but Apple's highest ever free cash flow report, which I think was like 53 billion or something. But what's called, they're going to show, by my estimates, which is essentially $93.5 billion, which they could be a lot higher. There's some analysts that have it like at 96, but above 93.5 is 100% growth rate. Re-accelerated from dropping all the way down to 55%.
Yeah, they don't have the China revenue overhang now, so.
Yeah, they don't have the China overhang. And not only that, they probably actually have a little bit of China tailwinds, a little bit of sales.
Yes.
So, yeah, people are calling for the SPY all-time high. It's not. We're $20 off. So I see some comments saying SPY all-time high. That's not what I'm seeing right now.
Yeah. Oh, sorry.
No, I was just going to say, if we... sorry, I'm looking 1 minute. Back on June 2nd was slightly higher.
Close.
So, intraday.
We're probably like moderately in fear or something on the fear and greed index. Maybe not.
And now there's a red candle now that it's on the screen.
There we go. Yeah. This is what happens.
Yeah.
Yeah.
NASDAQ,
with NVIDIA. Go ahead.
NASDAQ, we're a little bit of ways off.
Yeah.
All right.
NVIDIA would help with that if it had some share price helium. So I with Apple overtaking briefly the Nvidia market cap, I'm just like, this is just so wrong and so disrespectful. It's crazy. But I did sell some Nvidia stock. I sold a
Okay.
third of my position and I bought more CoreWeave with it.
I was
So
gonna say the only thing to do whenever I hear people sell Nvidia is, or at least for the most part, this is not a true thing, but the people that obviously trade like me is they just go more high beta. They just increase the
yeah,
risk.
I hated doing it because I'm like, dude, Nvidia is just being disrespected. It's a great opportunity, but I'm like,
But so are these other businesses.
exactly, yeah. Yeah, no, I trimmed a lot of different names, just like little bits here and there, just to make that core weave. And NVIDIA was one that I don't think ever sold a single share. And that was the first time I was like, it's still like tremendously up for me since I was buying last April when you were thankfully pounding the table and I finally took time to listen. But yeah, regardless.
um, that said, I did want to ask you about SpaceX. SpaceX is off from where they IPO'd. I think it was
Yeah.
135 was the IPO price. Ended up going up to, was it like 180 something, 177, something like that.
Yeah.
Um, Ended up passing a $3 trillion market cap, and now Elon's no longer even a trillionaire these days. So, what's going on with SpaceX, and do you think that there's a price that you would be willing to bet on this company?
Yeah, this is a normal IPO, just playing out the way it usually does. There are always exceptions, but
For
even
sure.
Elon companies usually will be consigned to gravity, and that's what's going to happen. That is what's happening.
I mean,
SpaceX
out of
is
all the
still
businesses that you could have used the term gravity for, SpaceX is an
there,
interesting one.
not intended, but yes. So it's a very very good company. It is, but it can also be said that it's very expensive. Even here, it's not cheap. I am very interested if we do see 800 million on the market cap, which is still down quite a bit from here. I'm very interested, and I probably at that point need to just figure out a way to buy some. I bought 3 shares of SpaceX in the IPO, and I was like, hey, this is like a uh, um, ticket stub, concert ticket stub. It's I'm not expecting anything because I was so desperate for Corey money. I'm like, I'm even selling those 3 shares at 130. So
Yeah, yeah,
uh,
wow.
I'm just
Does
like,
that does that punish
go.
you because you're out before the 6 months?
It was out within the 30 or after the 30 days. The 30 days is the
Okay.
period where you're actually penalized and prohibited. I don't want to make it so I can't buy anything in the Anthropic IPO when that comes. It's the one where I might just buy some shares and hold them long term. I don't think I'll be allocated much, and it'll probably still do the exact same thing as all the others with IPO. That there will be a much better entry within the next 6 months. But yeah, no, it's obviously not going to zero. Their revenue is very well propped up because of the data center and over allocating on the initial buyout, which has worked out really well for Elon. They've had some massive contracts announced, and that's an industry that's going to grow massively. But it's tough just because there's so many other screaming buys on the market, and it's hard to look at SpaceX unless you're looking out 10 years, which I think is fine for investors, and be like, hey, this is now the time to buy even though it's much more attractive here, of course, than it was at 200. But yeah, there's a lot of other space names that have been weighed down, and so like some of those, like Voyager is one that I think that the market I'm not in yet, but it's one of those I'm investigating. I'm looking into it. It's up like a lot of space names pretty tremendously today, but there's several others too in the space. ASTS is a retail favorite, not my favorite personally, and a Firefly is pretty good. Rocket Lab is one where I've done due diligence. I missed it. The market has brought it down a lot, and it's like, man, I think if SpaceX continues to fall, the problem is would I buy that, or if it keeps pulling down Rocket Lab and Voyager, would I just buy those? And probably that'd be Rocket Lab.
Yeah. They
What
might be
about for you?
the real second place, I guess, eh?
Yeah. What do
I
you
mean,
think?
I was gonna say if I buy any like if you look at my portfolio and even all the past buys, I don't really buy the second place names.
Yeah.
I like the market leaders. If I enter the space name, it'll be through SpaceX. I don't know if I'm ready at these prices. But that could change literally in the first earnings call. This is
Yes.
such a brand new business to public investors that, to hear what they're working on, to to see the programs that they've done in the past with the capital that they've had, you know, 5, 10, 15 billion dollars to fund this business with an extra 85 billion is a lot of liquidity to give Elon, you know? So I'm not sure, but then also we're not really out of the lockup here. Like we're still at like 4% shares right now, and we're already dropping off IPO highs, which was the real concern of what we thought was going to sell the stock off.
I think it's higher than 4% now, but yeah, like the big one is Elon at 366 days, I believe.
What was has there been unlock yet? I thought it was at earnings, and then depending on where the stock price is on earnings. We haven't had any of those.
Yeah, I need to look. It's a weird one because it's not like a typical IPO is usually just at this date and this date and this date, and then this is like at this date contingent on this price and these factors, and it's like okay, yeah. Every single time I forget and I have to look back, so I could be wrong, but
no, for the stock. To be honest, it's way better than having a day where all of the shares go. Like, you know, let's smooth it out a bit.
It's a good day to be a buyer and not a good day to be a holder, usually. So when it's that lumpy. Yeah.
Right. Are there any other companies or anything like this that you're following?
I mean, like there's a lot. I would say like one that has not reported yet, but I'm pretty excited about. I need to look back and see when earnings are. I know it's in the next couple of weeks. Is Figure. Figure's one where metrics and everything, they're killing it, but they're in a space where a lot of people are like, it's associated with crypto. They use crypto. They don't care about the price of crypto. And it's also a lender into an uncertain rate environment. And so it's kind of like the same thing weighing on SoFi. But yeah, they're growing at 100% year over year. Like they've announced several things that it's you can look and see the dashboard metrics, and you can look at the Provenance blockchain. It's tremendous growth and tremendous ramp, but where they're trying to enter into is into the first lien market, specifically with some of those smaller lien sizes, which is going to be amazing, but also that's an area in the market that's just completely dead right now. So, it's one where I'm not buying it expecting a return tomorrow. I am expecting a nice return in the next 5 years. And so I'll be very interested to see what those results are, even though we know a lot of the preliminary numbers. We didn't talk about Robinhood afterwards because I had to jump off real quick there. What did you think of the call and the numbers?
I mean, they did fantastically, and they continue to focus on the future. I think it's one of those businesses like me and you didn't even ask questions. They ask or they answer everything to the point where there's nothing that I don't really that I'm still pondering on. It's just a matter of like what the market's going to do, and a little bit of that is, well, a lot of it is out of their control. So I like the brokerage business. They won't grow as much as we'd want whenever the markets are slow, and July is going to be really interesting, and August is going to be really interesting for their overall metrics, but June is a perfect example of whenever things are strong, Robinhood's just going to make an absolute fortune. High margin businesses that continue to improve over time. And now they're looking way more holistic than even whenever me and you first started our positions. Like we were buying a brokerage and now we're buying a one-stop shop.
Exactly.
That's going international. I like that. I like it across the entire industry. Like Schwab looks interesting. IBKR looks interesting. Like it's just an amazing business model.
Yeah. I know you were looking at, I think you were looking at, I don't think you were invested in eToro a while ago. Are you still, are you invested in that? Or are you just kind of monitoring and seeing, or?
Yeah, I'm looking. I think a lot of their products are pretty interesting and the valuation's definitely interesting, but it does look like they are slower growing. And like I said, I want to buy the best companies. I don't want to buy second best.
Yeah. Robinhood is just premium right there. So yeah.
IBKR
and you're in Palantir.
Premium. Like
it's a strong business. It's a very good,
strong business. And I wouldn't call them legacy, but I think they're out of the retail investor scope. Like no one's paying attention to it, but you can just look at their financials for one moment and realize that, they're growing in market share. The margins are extremely high. The incentive for management is perfectly tied to their performance. So, I don't really see a lot of red flags with that name. They look great. I like that entire industry. But yeah, Robinhood was really good. I interviewed Vlad 2 days or something after the earnings. I don't remember. Their earnings were Wednesday or something, right?
It was, yeah, Wednesday, and I think it was the next day for you that he walked all the way up to
Yeah.
interview with you.
You walked to Toronto.
That's so great.
And yeah, found out that he was in Toronto, and we set up a podcast. But what's it called? The questions that I had were mainly about like they're not answering questions about their equity platform or anything like this. It's all about Trump accounts, Rothera. Like the business is constantly like solve a problem, and then almost we don't even need to worry about that anymore. Like our options business is solved. It's a solved problem.
Yeah.
And it's just bringing in hundreds of millions of dollars in equities and all of these things. Now let's worry about, event contracts, and we'll worry about how to vertically integrate and lower the costs, and then we'll move on to the next thing.
Yeah.
And it's a beautiful business.
It is. Yeah. They are run by some of the brightest people in this space. So it's easy to, like, I was not sweating it at all. I'm sure you were the same when, we were in the 60s in terms of share price, and here closer to 100, it's like, yeah, it's Robinhood.
Now,
Go ahead.
oh no, I was going to pivot just in case you had to jump off soon, but I was just going to wrap around back to Palantir. But if you can stay a little bit longer.
I've got about 5 more minutes, and then I got to hop off. So
okay, well then let's talk a little bit about Palantir to wrap up.
Yeah,
you're above expectations on revenue. You said about 84%. Wall Street, I think, is calling for about 80. Is that correct?
I think a little bit under. I'd have to look. Let's see. Actually, 1.811 billion versus I have 1.85. So I guess they are right around 80. Yeah. 81.
Okay. Yeah. And that's under what Alex Karp has been talking about.
Yes. So he's talking about next year revenue growth of 100% is the target. But he's also said things like we're not able to keep up with demand, and also that they're not planning on hiring. So it's like, well, yes, but you're comparing against harder and harder comps. Net dollar retention is flying up. By the way, I have here an increase from 150 to 158%. A lot of that is due to the timing of onboarding of some new clients the first quarter of last year, and so those wouldn't count towards net dollar retention for any increase in contracts until now. And so I think it'll be a nice step change. But that's one that goes right into that growth rate. Like if someone's not familiar with SaaS, net dollar retention or net revenue retention, some companies have it. That's the amount of increase that these existing clients have. And so in this scenario, if Palantir does come out with this number, and for somehow they don't sell to a single new customer over the entire quarter, they would still put up 58% growth, which is just, it's insane. But obviously your clients, if they're happy with your services, with your product, and it's doing well for them, that net dollar retention will continue to increase up to a certain point. Obviously, you're not going to see like 300% net dollar retention. But yeah, this is a business that is just absolutely killing it.
Yeah. So how do you, just for my sake, how do you guide for net dollar retention going forward?
You have to look at contracts and then new clients a year ago. So a year ago plus 1 quarter. And so Palantir is a little bit unique in the way that they monitor it. So if somebody comes on as a client, which happens a lot, where they're like, hey, let me sign and ink this deal for this type of service and using your AP platform. And then as they get into this, like 3 months down the road, they're like, this is amazing. We need more of this. And so they're like, hey, let's also use it in this area. And so here's a new contract and everything. That's great. You'll see that on the deal line. You'll see that on the RPO and so forth. But you won't see it in net dollar retention because they say, no, you have to be a client for Palantir for a full year before they start factoring in the net dollar retention. So I think that there's several different indicators from this. Like one is we have several different announced contracts. So here, probably Arnie is the best person if someone's in Palantir to follow because he comes out with these every single quarter. I had to do my own homework this time because he was busy and he didn't get this out until today. But I'll keep track of these and then I'll look back again last year and see number of clients that onboarded. We'll see if there's a glut in terms of contracts. I'll look at new and more recently announced contracts versus if they were a known client previously or not. And then there's some napkin math in there, honestly. So that's where I come up with the 158%.
Are those contracts like paid evenly split? Because my understanding is Palantir also charges usage based on how much you're actually using the program, or are these large contracts sold a little bit differently?
So it depends. So on the commercial side, oftentimes we don't hear about the size unless it's like really substantial, like the Airbus expansion.
Right.
McKinley last quarter, I think it was 500 million. Or it was the amount that was put out there. I don't remember the number of years. But a lot of the government ones are going to be like indefinite IDIQs or BPAs. So this is not a guaranteed they're going to make this amount. It's divided evenly necessarily. But some of them, like the UK Ministry of Defense, the way that they pay these out, it also depends on the organization. So you can look at the 10K and 10Q filings, and they'll talk about customer concentration, and they'll have identifiers of like customer I and customer G, which is a government, and they'll talk about how much is happening there. And so oftentimes you'll see that these pay out like every 6 months. Now, how that works with their revenue being so streamlined and up, I don't know that. I just know that it usually does. Of course, it's pretty obvious when it's a 1 year contract, but yeah,
Yeah.
some of these smaller ones, I mean, these are nothing burgers to Palantir. I just noted them because people would be like, "What about this contract?" So
Yeah, the interesting thing for me too, like when I'm trying to learn more about this business, is I assume that cash is going to increase quarter over quarter. But why is it growing so fast? I know that they can't use it for buybacks, but if you're at full capacity, you have a very small, like they're trying to do more with less people. Why don't you try doing more with more people? Like,
yeah, no, I have that same question too. In like, what's the plan with this? That's soon to be $10 billion. I'm not so certain. I think I've shared with you, and that may be where you're getting it from on the lack of buybacks. There was an executive order, of course, in January that Trump signed that made it so that defense contractors could not do buybacks. His complaint was actually very similar to Alex Karp and Shyam Sankar's complaint that these companies largely were not investing and innovating for the future, but instead
yeah,
were just like, hey, let's pump up our stock by buybacks instead of actually innovating. And so at the same time, when Palantir had earnings and their 10K came out, they announced that they had canceled their buyback program, but they had authorized $1 billion. They'd only used 75 million. Again, the price was extreme on Palantir, and so the buyback program wouldn't have been successful. I asked one very noted Palantir bull, and it wasn't Amit. So you might ask Amit and see what he thinks on this. I need to do the same. Um, it's not clear whether or not they are prevented from the buybacks and if that's the reason why. All they said on the 10K was something like, we voluntarily exited our buyback program or
mhm.
terminated early, something like that. So beyond that, like that was my question. Last, I didn't do one on Say Technologies, which owned by Robinhood, by the way. Last quarter I did, it was the top voted Palantir question, and it asked exactly this: is like, how are you going to plan to use this cash file? What's the strategy with this? Is it like a combination of dividends, buybacks? Are you looking at, I put a lot of different things out there, but we didn't get an answer on that. And I think that they may still be trying to figure it out. Like the hard thing for this business too is if they're a normal business would not be growing at 85%
Yeah, yeah,
and generating this much free cash flow and have clean, like you talk about fortress balance sheets, like 8 billion going up to 10 billion in the next few quarters, zero debt. Like it's insane, like just what they're able to do. But almost anything they acquire, Tanner, is going to be growing at a slower rate than their business, which is just crazy. It's usually the opposite with SaaS, where you have the Salesforces and the ServiceNows, where they're like, all right, we do a lot of M&A. Nothing's wrong with that. You buy it, you accelerate your business, and it's also growing faster than your business. So it's like a double accelerator. Palantir, not really. Yeah. And I can't
yeah.
think of anything. I'm sure there's companies out there that would be accretive if they bought, but it's a different culture and company. I'm not sure it would be really that beneficial. So I don't know what the plan is, but I don't know that buybacks are off the table either. So I
Final
could have been
question.
wrong on that.
Final question before you go. Pump or dump on earnings? And I'm going to ask the same question to the chat.
I'm going to
Now,
say dump just because we've seen they're going to have really good results. And this quarter, when you have great results, usually the market sells you off
do you think
short term.
today is an exception because of how good of a day we're having?
It honestly, like historically, Palantir tends to pick the worst timing on their earnings. Like Yin Carry trade day, that was Palantir earnings call. into that. Uh,
Can I
but
just
yeah,
say though, I love, love, love that they do a Monday call
oh yeah.
because it just allows them to sort of stand alone and me not have to pick AMD or Palantir. I would go nuts if I had to choose. So the fact that they
Yes.
just do a day alone and I get to choose between Palantir or Snapchat, like thank God.
Yes. Yeah,
Easy call.
they're such a different and differentiated company and in so many ways, like even like coming into market with a DPO instead of IPO, how they report, like the video calls like early when very few people were, it just I love it. I really do. I love this stock. You're not supposed to fall in love with your investments too late. I love the company as well. I know a lot of the guys that work there, rooting for them. Yeah, I'm excited. Like this is like even if you're not a shareholder, I think these are the most entertaining earnings out of any company out there.
Yeah, yeah.
You
I've
will
had
be
a
entertained.
couple conversations over the weekend. It's actually a Canadian holiday today. I'm not supposed to be working, but um, that said, I had a couple conversations this weekend about different stocks that I was looking at. And whenever you bring up Palantir to the average person, the person who's not following these companies, this might as well be a terrorist organization. I mean, they look at it like an evil corporation. And it's wild that that certain companies have that stigma over them. And honestly, for a long time, Robinhood kind of had this stigma of like, oh, you deal with them, they're terrible for retail. Like they have a villain for a CEO. Um,
Y- there's some reasons why, and it's the same reasons as there's a negative overhang with the data centers. It's some of it is grassroots, but a lot of is adversaries don't really like effective technology being deployed in the United States, and they will do what they can to try to hinder it any way that they can. And
yeah,
there's a lot more of that beyond just what you're hearing about in the news. I get to hear about some of it just, but yeah, it's a real phenomenon. Like how much is grassroots versus that? I don't know. I have no idea, but I do know there's some of both. But yeah, I got to check out. But man, I'm so glad you're a Palantir shareholder. I'm excited for these earnings. Are you covering them live?
yes, I'm going to be live all the way through from now till 6:30. So,
Sounds good, brother.
all right, man. Talk to you
Take
later.
care.
Ladies and gentlemen, that was Roy. You can check him out. Matt put his YouTube channel right there at Dr_Crossroads. Check Roy out. He usually has a good mic, but he's just on lunch right now. That's my understanding. But yeah, it was a long last 5 minutes. We squeezed out as much as possible from Roy all the way to the end. There, Matt is putting in the link there for you guys to click. But that being said, how crazy was that statement from Morgan Stanley? I didn't talk about that at the time. We only talked about that with Roy just then. But Morgan Stanley, here, wait, let me bring this up again. CapEx for 2028 for Google. Wild call out. So not only did they say in 2027 CapEx for the entire sort of cloud spend would be $1.2 billion. For 2028, they called out Google having $500+ billion in CapEx. Let me show you this really quickly. Where was it? Oh, come on. Here it was. The firm now sees that Google is going to be spending $350 billion next year with $500 billion in 2028. Ugh. Oh my God. This takes us well over 100% of operating cash flow for the next 2 years in the near term. Noted above, Q4 and Q1 cloud margins are weighted down by the $1 billion per month GPU lease with Colossus, that's SpaceX, which serves as a temporary bridge for selected GCP customers and likely frees up some first-party capacity for the big Gemini 4 training run. The surge pricing rate Google is paying is raising some eyebrows. And then, we'd have to get the exact report for that. But it's still mind-blowing to see these types of numbers come out. And then whenever these estimates do come out, this is only if this actually ends up coming true. Okay. which are very, very high estimates. But you're starting to see Wall Street make these bold predictions. And usually they don't make bold predictions that are way too out of consensus, because then, you end up being wrong too largely, and, you can get fired for these types of things. If all of Wall Street across the board is wrong on a stock or where the markets are going, no one's getting fired because no one knew. But if everyone's saying to sell a company and one guy says, hey, this company's going to the moon, and then it ends up selling off, well, that guy's going to face an unfortunate future. So as more and more of these analysts stick their neck out to say, hey, we actually think CapEx is going to expand greatly, that 2026 was not the height, 2027 is not the peak, but in fact, we're looking out to 2028, and honestly, we don't even have commentary for 2029 just yet, all continuously increasing. It does make you wonder about where the prices for AMD, Lumentum, Micron, NVIDIA, Broadcom, all of these component names and GPU names end up sitting for the next little bit. All right. I've been buying Palantir in bulk since DPO. DPO was a hard buy. I think they direct offered at $20. They ended up going up to $40, and then dropped down to $7. It's wild to see the day one investors in Palantir and still hold through, rich as ever. Congratulations to you guys. Palantir's free cash flow is the real story. The interesting part about Palantir's business and being the application layer, right, is that they don't have to do the major build-outs. They are going to be one of the most profitable layers in the entire business, even more so than what you would think from the Neoclouds. Obviously, I do think that there's beneficiaries if there's a lot of spend on, GPUs, and Nebius ends up winning, and CoreWeave ends up winning, and all of these companies. But they have to put so much of that profit back into buying the next data center that customers will set up in. And then, depreciation of those chips is absolutely very, very real. It doesn't mean that they can't be profitable, and, the CEOs and the employees are not getting paid handsomely. But what's the shareholder return on that? For Palantir, as long as you remain the, primary software beneficiary, a lot of that just goes right to the bottom line. And you're seeing that in the net income margins, the gross margins, flowing all the way to free cash flow margins. Great business, at least right now. But it doesn't look to be slowing down, or at least by Alex Karp's estimates. Okay. That said, let's see where the S&P is still sitting above 7,600. It's been above 7,600 before, but that was back all the way on June 3rd. We are now roughly sitting at all-time highs. That would be at 7,620. Not far from here. It's normal to see the S&P end up having these sort of 20-point moves. That would be very easy. That said, though, it's going to lay a lot on, what the macro, what's happening with the macro. Trump can end up coming out saying that talks are not going the way that they want. People end up fearing oil prices rising. And then we end up seeing this whole sort of reversal again. But currently, oil prices are low. Hopes for talks are increasing. And Trump's sort of doing that same playbook that we've seen, going into the close of the end of the week, talking about doing major strikes. And then by the end of the weekend, it's seeming that they are coming to some sort of agreement. They're not going to be doing one of their biggest strike plans that they've ever laid out. And it seems to be this as sort of like clockwork for the last little bit. Is anyone trading around that? How many active traders do we have in the chat? And how many people are seeing a similar trend to what I'm seeing? Or do you see it being a little bit different? But to me, from the last few weeks or even months, it's felt like there's been some sort of rising conflict at the end of Friday, only to then close before Monday. And go back into productive talks before the stock market opens again. Obviously, some escalation at some points, but yeah. It's basically end of Friday calls and Thursday. Yeah, it's wild. Thursday and Friday, it really ekes up. And then on the end of Friday, do the calls. SpaceX earnings will be interesting. Can't wait to see their books. Well, yeah, I mean, we had the S1, but I think there's something different about an earnings call and being able to do like active Q&A, ask the questions that we've been sort of sitting on for the last couple of months. That's very important. Okay. Let's see some commentary here. We've been going live for about an hour and 40 minutes. We will be live for the next about 4 hours. So strap in. Make sure you guys are ready for Palantir earnings, which we are going to get around 4 o'clock. That's going to be really the most important part. Let's hear some commentary here while I just run to the bathroom really quick.
Amazon and Microsoft were to successfully make the case for continued CapEx this earnings season. Does it make them also the best position to win the next leg of the AI race? Let's ask Gil Luria. He's head of technology research at D.A. Davidson. I love looking back at the history of this, Gil. Microsoft was first out of the gate. They were the golden child after ChatGPT. They had the OpenAI collab. It was all about Microsoft until it wasn't, which was up until about last week. So you think they're going back into the leadership position here?
Yeah, they have. They have. And part of it is that they actually reported positive cash flow and said that they'll retain positive cash flow, where Google and Amazon are already negative and will stay negative. Microsoft said they're going to increase CapEx next year. They didn't use the word significantly, which is why the market had the negative reaction to Google. Now, part of it is that they're not just selling AI compute. They're doing a better job than the other two at selling infrastructure software on top of that. They have all the Microsoft Fabric and databases and orchestration layers and control planes and harnesses to upsell their customers, which is why they're doing just as well without, those are less capital intensive businesses. So they don't have to match the CapEx at that scale that Google or Amazon do. So it's a little bit of an advantage they have, both in the ability to deliver and the efficiency to deliver that. Having said that, all three are winners. The only difference right now is valuation. Amazon's the most expensive, Google the second, and Microsoft the least expensive. All three are winning.
What about Meta, Oracle? They're a little bit more on the bubble. The investors are a little bit less sure where they and some of the others are going to come out here.
A lot of it has to do with execution on the Oracle front and decision-making on the Meta side. If Mark Zuckerberg decides that he'll be transparent with the monetization of the data center build-out and tell us how much he's going to make by renting out that capacity, which could be a lot, investors would have been a lot more comfortable than him saying, well, we're not sure yet, which is the multiple quarters that we've gone to. Yeah, we can rent out compute capacity, but we're not sure yet. On the Oracle side, it's just execution. They need to get data centers built. They're having a problem with that. They need to raise capital. They're having a problem with that. They said they're going to do an at-the-market equity offering at the beginning of the year. They haven't done it yet. And the stock keeps going down. So now it's even harder to do. So they have that lingering. This is all execution and messaging. Both of these companies can do well if they do that.
Is that the only problem, though, or do they need a partner with deeper pockets? Or you know what I mean? Should Meta get into the cloud? I don't know how you get into the cloud business up against these incumbents at this point. Should Oracle have some kind of partner with a better balance sheet?
So Oracle does have all the cash flow. They'll probably have $25 billion of cash flow from their core software business. So they can fund some of the debt. It's just that they piled on too much. So they need to slow that down, build the data centers, get the cash flow in, and execute on that. It's a high wire act. That's why the CDSs are trading so high. And in Meta's case, again, they also have the cash flow. Selling ads is a fantastic business. They just grew that as 28%. They can fund the growth. It's just that investors are saying, we want to own the ad business until you show us that you can monetize the data center business, we don't want you to keep investing more in that than you're investing in the ad business.
I think that's a fine take. Now, are they going to look to enter the cloud business? The answer is absolutely yes. They just hired the AWS lead. I think it was, let me try to find it, but they are hiring people specifically for cloud businesses from some of the biggest names. Yeah, Dave Brown. Here it is here. Meta is hiring a long time. If I remember correctly, you guys can test my memory. I think he was working at AWS for or at Amazon in total for 19 years. Dave Brown is going to help lead AI data center build out as it weighs a cloud push. It's going to do more than weigh a cloud push. But yeah. SoFi is so fly. It's having a good day. SoFi is having a good day. Up 9.7%, 1791. Very different than where we came out of earnings from. You know, the stock ended up selling off double digits, like down 10% on a good report. We're seeing a lot of green. This is the volatility, right? This is why, you know, last week, whenever we saw mass retail capitulation, you guys don't have to say in the chat, but the people who I'm talking to, you guys know who you are. The fear selling on the worst possible days because you think it's the end of days or like it's the end of time whenever it comes to investing. It's like, focus on the earnings. You know, we're going to come out of this earnings result with another likely probably 80 to 85% plus beats on expectations like we have seen in the past couple of quarters. And whenever you have that, companies like the expansion that we've seen in companies' multiples is justified because they end up, making more earnings. More earnings and more higher employees that not only have stock-based compensation or profit shares or these sort of things end up benefiting from these companies doing well. More people have more money to spend in economies. And, you know, people can live better lives and pay back their credit cards and all of these things. And then stocks should be higher. But during those sell-offs, because markets are voting machines in the early term, long term, they're weighing machines. There's buying opportunities for some of these great names. So you can have Microsoft bring, like the stock was lower than $350 or something. I made some joke saying Microsoft 365, but I'm pretty sure it got even lower than that. Now we're almost back to $500 right now, Microsoft. And I literally have been saying this. 349 is what we got. We got under 350. But, you know, I said this a while ago. Like I bought, what was it? I think the first one was Google. That one was oversold. Bought that one going into the sort of the last year, like in the 140s range, and then on the way up. And then we bought Amazon, and then we bought Meta. Meta's still kind of the one that's sort of breaking trend because it didn't increase right after the last earnings. But then Microsoft is following that trend as well and got oversold on a bad earnings. It was down like, big double digits. We could probably scroll back and I don't even need to look that hard. You can probably see some of these moments where it ends up showing off earnings at 483, falls down to 430, and then continues that drop all the way down to 356. Like on great earnings. I think it was like slightly slower than expected Azure growth. Okay. This gully was the buying opportunity. Now, I'm not saying that it can't go lower from here, but I think it's likely going to not return here unless we see some true, black swan event. It's not going to fall there on its own, I don't think. I think that would have to be an entire industry sell-off. But yeah, so Microsoft looked really good, up over 25% in the last 3 days or so. Might even be even higher than that now. And I wasn't even around to fricking listen to their call because, well, I'm not here to complain, but we were interviewing Anthony Noto. But those were some of the best days to, like, the Leopold situation and everything. I wasn't covering that live. So sad. But then, you know, after Microsoft ends up ripping up and Meta is just staying flat, there's always opportunity, even just in the Meg 7, to end up, you know, taking some profits from Google or Microsoft or some of these names, which I'm not actually looking to sell out of. But you know, betting more on Meta. I think they're all going to be significantly strong. And the only crap that people talk is whenever they're down, which should be the opposite. It's just been a flurry of I told you so's on the way up. But whatever. And then the next will be NVIDIA. Some profits off the big fruit and into data centers. Wonder who did that. What, did you do that, Steve? You sold Apple? No way you did. Reddit's another one. You can wrote, like, I like Reddit here a lot. Like, who brings that company down 22%? Was there another aspect that I didn't understand that people sold it off for? I know stock-based compensation was high, guidance was lower than expected, and daily active users was lower than expected, driven by traffic from Google, which people thought could be like a bigger theme, which it still could be. You know what? I actually said in a recent thing that I said Leopold would, you know, blow, like, it would be a little bit of a flash in the pan type event. I think that he's going to have a significant career. It's not the last of Leopold Aschenbrenner. He's not locked up or something like this. He just, you know, got over levered. The dude's still very, very young, and even looking back, I think he's still like up 80% year to date. Like, it's something ridiculous. Like, he's made a fortune. But it goes to show you why playing with leverage can burn you super quickly, even though you might even be thematically correct. Okay. No, it was just the 3 things that you mentioned on Reddit, but additionally, it's bad. It's a bad company. Okay. You don't need to like Reddit to like the profitability. That they're just going to become a buyback giant. If we don't buy this company, they will. And the same thing can be said about NVIDIA. If no one buys this company and we just sort of sit on our hands, the company will buy itself. The sort of $80 billion buybacks and this sort of stuff will pale in comparison to a company that's grown 100% in revenue since then. And then they end up doing $160 billion worth of buybacks if the CapEx cycle continues even longer than we expected. If Google's CapEx gets to 500 billion, you think that NVIDIA is going to be dead money at 200 that whole time? Yeah, Steve, I'm doing AMD's earnings tomorrow for sure. And honestly, I can't wait. I hope they crush it. Because I think it's just going to be good for the AI trade in general. I want all the players to do well. I don't want one player to do well. Okay. AMD to 1,000. Well, I don't know. I definitely think that there's a lot of their earnings that's pulled forward a little bit, especially in the last little, like, we're off $100 from the high. That was even a little bit more pulled forward. You can kind of have these Palantir events where the stock looks like it's going to continue to compound and beat expectations, but yet still it's decently pricey. It doesn't mean that you don't bet on those companies for the long term. I just wouldn't I don't think every day is going to be a pump for AMD. Now, if someone said NVIDIA to 1,000, well, I mean, that's assuredly. No, I'm kidding. AMD will be $1,000 one day. I mean, look at the CAGR on their overall growth. Like AI accelerator CAGR, I think it was like 45% or something. CPUs 30%, up from 18%. Like, it's wild the amount of growth that we end up seeing. Okay. Who's on CNBC? Tom Lee. I'd like to see what Tom Lee says. Let's have a listen to that. Sierra and Plaid partner to power AI-driven finance. Ooh, I want to see what Plaid's working on these days. Tom Lee said 2027 could be one of the best years for the stock market. All right. Let's see. Do you guys put any weight on what Tom Lee says?
Tom Lee's here, head of research at Fundstrat, chief investment officer of Fundstrat Capital, as well as a CNBC contributor. It's August 3rd. I'm glad to have you here, and I'm glad to have you here at 6 a.m. Just to get your comments. I thought in July, last time you were on, you shook me because you said that we could have, before ending the year much higher, that we could have a, what was the drawdown? You said I could have gotten to a 6 handle on the S&P based on the numbers you were talking about.
Yeah, something that'll feel like a bear market, 10% kind of drawdown.
That's what you thought. It was not a good month for July, and you said that it was, even for what you were expecting, it was not as positive as you were thinking. But the averages didn't do that. There was a day where the Dow went down 1250. Who knows what's going? That was an AI unwind for that hedge fund to explain it. Doesn't matter what caused it. It did get down, 7,200, nowhere near 6.
No,
or maybe 73. How low did I'm just off the top of my head. Is that enough now?
Well, I think August is a month to recover how June and July have been sort of flat months, but earnings estimates have gone up a lot. So the stock market's kind of a coiled spring. And then we had a huge deleveraging, as you're talking about, because of the AI unwind and Korea's policymakers panicking. So I think the markets could actually rebound strongly this month. Like maybe we get to 7,800.
This month, the 7,800.
Yeah, for the S&P.
Is that forecast for the 10% drawdown still intact?
Yes.
It is?
Yeah, so...
Can't you take that off the table? Will you do it for me? Say it doesn't have to. No, kidding. So we get to 7,800, maybe a 10% drawdown, and then close the year above 8,000.
Yes. Yeah, I think because as we start to look at 2027, there's a lot of the clouds that are heading this year kind of lift. The SpaceX unlock will be behind us, and the market testing of the new Fed will be behind us. So I think, and then of course, there's already been a leverage unwind. So I think 2027 could be one of the best years for the stock market.
And you think part of the positive sentiment this month is going to be cooler inflation data? Why?
Yes.
Why? Oil's back up.
Yeah, oil's up, and we still have the tariffs working through, so those are hitting the CPI numbers, but the real driver of inflation historically has been housing and wages, and housing has really disinflated. We've had 3 months now of declining home prices. So you're taking out one of the biggest weights for inflation. And then I think wage inflation is really muted. I mean, we'll find out this Friday.
Hey, Tom, I just want to ask you what you think of the Leopold Aschenbrenner situation and the idea that he was highly leveraged 4 times, had to unwind this stuff. How much of that played into what you were just talking about with South Korea and the panic that happened there? How much of that was because he was selling that portfolio at the same time?
I think it was a big factor because, as you know, Korea is basically two companies, Samsung and Hynix, so it's memory and semis. He, of course, had a very large following. So not only was his leverage on his $45 billion, let's say it was levered to 100 50 billion, but there was a lot of money piggybacking on his trade. So I think in some ways, you know, the unwind, and even last week was due to a lot of funds being aware that he might have been in trouble.
I was eating. I didn't think it was going to end that quick. All right. Well, I was hoping he was going to say more about the Leopold commentary. Said he had a big following. It's kind of like what Tom Lee, like what happened to Ethereum. Once that started dying, he started losing fans. Everyone ended up selling out, almost made it worse. Okay. Let me just finish this food here before we end up getting into the later half of the day. It's 3 o'clock. Markets close in an hour. And then we got Palantir, Snapchat, Grab, On, Semi, bunch of names there. Let's go ahead and continue to have a listen to this real quick.
It has been a strong earnings season so far overall, with the highest percentage of companies beating earnings estimates in 5 years. That's according to Bank of America. But our next guest notes the reaction to those beats has been a little more muted. So how does that set us up for several key reports this week? Let's ask Chris Senek. He's the chief investment strategist over at Wolfe Research, and he joins us for today's earnings exchange. Chris, it's great to see you. Broadly speaking, look, we've seen some big names to the upside, like an Amazon and a Microsoft last week. But what has the overall reaction been to these strong results?
Yeah, hi, Kelly. Thanks for having me on. So it's been muted than in the past for companies beating on revenue and EPS. The stock price reaction's only been about 0.8% compared to long-term average around 1.2%. So macro forces, unwinding of momentum, hedge fund blowups, all that's contributed, to other noise in the numbers. But the results themselves, as you mentioned, have been exceptionally strong.
Yeah, and I guess maybe it was priced in. I mean, let's put that to the side for a second, talk about some particular examples. For instance, the memory names. You have SanDisk and Western Digital both reporting this week. They're reporting after the bell Wednesday, and those stocks are up triple digits year to date. 193% for Western Dig. SanDisk is up 408, and that's a percentage. Investors are listening for commentary on supply tightness, margin expansion, long-term contracts. Chris, I mean, this is like a high wire act.
Yeah, no, it definitely is. And the market is expecting clearly another beat and raise quarter. It's really the size of that revenue beat and forward guidance. Also for SanDisk gross margin trends, that's extremely important. In the case like Micron, their gross margins have more than tripled over the last 6 quarters. So any commentary on that, which embeds manufacturing efficiency and so forth. And then remember with Western Digital, it's the end of their 4th quarter because fiscal year, and so fiscal 2027 guidance for EPS and revenue will really be most important. Western Digital's beat consensus estimates in 7 out of the last 8 quarters. So certainly the market's not looking for a miss. It's a matter of is that beat high enough? But it's really forward-looking commentary for those 2 names and gross margin commentary that's going to really drive this initial stock price reaction.
Yeah, and as you say, even with the re-rating, the bar you think is high. I mean, certainly for SanDisk or maybe for all of them. Let's talk about AMD, which reports after the bell tomorrow. That one's up 125% year to date, and analysts have revised their earnings up 54 times in the past 3 months. AI chip sales, supply constraints, China export controls. What are you looking for?
Yeah, the stock was down the 20% in the prior 2Q print. Now in the last quarter was up 20%. So it's been a really volatile roller coaster, but it's really the data center revenue growth, gross margins again, that really matter a lot. Of course, the guidance, and then the MI450 product ramp, which is supposed to really ramp up into 4th quarter and can really drive that revenue growth and gross margin expansion into next year. So product ramp is very important, more so than SanDisk or Western Digital, which are pretty much more commodity names. And of course, gross margins for productivity there.
Yeah, it's amazing, as you say, for the S&P as a whole. Margins are at new highs this quarter. Guidance is the strongest since 2020. I mean, thank you to corporate America for doing what it's doing here. A lot of heavy lifting to get us to these levels as the stock market continues to be strong, try to keep up. So Caterpillar, finally, let's talk about that one. It's out before the bell tomorrow. It's actually down about 14% over the past month. You've got data center power demand, backlogs, tariffs, all top of mind. What about this one?
The bar here is high as well. They've beaten consensus estimates the last 3 quarters.
I don't care too much about Caterpillar. Maybe I should. Here, let's just finish it out.
10% or more. The market's going to really focus on the backlog. The backlog has been up a lot. Margins, of course, secondary, and then anything on power equipment business trends, right? This is all dependent upon the AI build out, how that's going. There's read through from some of the other names that have reported. The results should be strong. It's just a matter of whether it's enough for the market at that point in time. But the backlog, I think, is how the stock will initially trade off it. And again, given that it's beat by 10% or more EPS the past 3 quarters, I think, the market's expecting another double-digit beat on the EPS side.
Okay. We're good. That helped me. I'm refueled off of carrots and a Cliff Bar. It's a good little break, If I'm going to be live here for 6 hours, might as well find some ways to refuel. Okay, let's go see what's happening in the news right now. Which stocks are moving. S&P continues to move higher. We just ended up hitting another intraday high here. Little bit of red candles, but nothing big. We're still up 1.57% on the SPY. So that looks really good. NASDAQ up 2.25% as well. Maybe some red candles, but nothing that I'm seeing a reason for the sell-off. Okay. I'm looking for a reason why. Iran won't allow any Hormuz routes except for the Iranian ones. We will not allow any route other than the Iran's route to open in the Strait of Hormuz, even if the U.S. brings an aircraft carrier into an illegal route of the Strait of Hormuz. We will target it. Okay. I wouldn't, you could say things like that. I wouldn't do it. Okay. Or else it's going to be a different spokesperson every time. The U.S. business investment in software remains robust. In Q1 2026, U.S. businesses invested in annualized almost $800 billion in software, nearly 2x the pace seen a decade ago, and one of the highest levels on record. As AI adoption accelerates, software is increasingly becoming core infrastructure rather than a discretionary expense. In our view, this reflects the next phase of the AI boom. It's no longer just simply about building the next AI models. Rather, it is about the companies investing trillions of dollars to deploy these models across various industries. You know what's crazy? I also read on the information today that the amount of spend that's happening on, like for Google's CapEx, is actually a bet on RSI. Not the typical indicators that we look at from the technical standpoint here, but recursive self-improvement, which has been a hot topic in artificial intelligence, some saying that they need to be very, very wary about recursive self-improvement, where it gets to a point where we can no longer manage artificial intelligence. It gets to a point where not only is it smarter than us, but the pace of its intelligence gets way out of hand. But then others obviously think that that's going to be a force of good. Or Elon sort of cutting it down the middle, where he says, I'm going to have to believe that it's a force of good because there's no stopping it regardless. So can we just bet on the upside here? Neil, if you're available here for the next, 40 minutes or so, why don't you hop on? I'll send you a link. If you have some moment to talk before Palantir earnings, I'd love to hear your thoughts on the company. I'll send it to you over X. Okay. Very reassuring by Elon. Well, I think that's the most honest answer. We don't have a clue of what's happening next. we can hope for the good side, but there's one thing that's absolutely assured. There is no slowing this down. Well, I mean, there's slowing it down. There's no stopping it. You know, if America says, okay, ban on data centers, do you think that puts a ban on Chinese data centers, on European data centers? You know, you tell people, hey, no more using Chinese open source models. You can only use the most extremely expensive frontier models that the United States will then charge even more of, because there's no, you know, essentially creates a duopoly or a few large companies that are in that space in the closed model side. Well, does that stop every other company outside of the United States from using open models? Does that stop Chinese companies from using models that would still be distilled off of closed models? They would still benefit from the advancements that Anthropic has made, but yet sell it for 100 times less. You know, the new DeepSeek Flash model is really, really showing up as being extremely cheap and extremely useful. Well, there's a lot of money and a lot of big tech companies in the United States. It's not every company that's in the United States. I'll be here in 15. What does that mean? That you're going to click the link and join? All right. We'll see you in 15 then. Tanner, do you even use AI? I mean, literally all of the days of all of the time. That's why I'm super bullish on it. Why do you think I'd be so bullish on it if I don't use it? You know, I see to me, it blows me away that there's humans out there that can't seem to look forward as where you think the curve is going to go for the intelligence of these models. Because I was around at ChatGPT 3. I was like, you know, there in the first couple of days as it released. And I was like, okay, this can send pretty great emails. You know, some spelling mistakes, some, you know, hallucinations, these sort of things. Like, but it was clunky, but it worked. And then by the time 3.5 came out, 4.1, 4.0, there was major advancements. And now, as we continue to go through that wave, you know, I hired a guy on Marshall who has the day off today. We wanted to create this little thing that ended up making chapters for the live streams. So we coded that like all of that to end up taking the audio files from the live streams, putting it into there, creating the chapters for the live streams after the stream is done. And it works. But now you can just take the YouTube link, put it directly into the ChatGPT 5.6 Soul, and it just spits it out a minute later. And it's like, okay, well, all that was a waste. You know, I've made so many of these little tools that we use internally to help update our spreadsheets or, you know, grab links and stuff. And now I just do it directly on ChatGPT's website. Like, it's Monday, so I got a scheduled task update. Hey, your BM&R spreadsheet's all updated. I just said, hey, go in, find my BM&R spreadsheet and update it every Monday. It was like one prompt. It does it every time perfectly. Use AI for transcripts. You're not understanding. You're not understanding me. I'm just saying it's for chapters. I'm not reading something. But yeah, now you can fire Marshall. No, but now Marshall has something new to do. I'm live. I can't be like constantly typing into ChatGPT. But I'll walk my dog and use the new ChatGPT live feature, which I'm not switching to these Chinese models, not until there's some orchestration tool or something like this. Like, ChatGPT is cheap enough for me, and because of the amount that I use it for, it just doesn't make any sense for me to want to change to any of these Chinese models. I like having everything on one sort of harness, and it just learns about our organization constantly. If Marshall puts information into ChatGPT, it learns from it. If I put information into ChatGPT, it learns from it, and then we improve over time. Okay. Let's get ready for Palantir. How we're going to do that? Neil, Couch Investor, is going to be joining us here in a moment. And then, yeah. Tanner, appreciate all that you do, man. I watch every day. Thoughts on how Palantir earnings impacts the entire software narrative? Very excited for tonight. Well, I don't think that Palantir's earnings have reflected what other SaaS names are seeing. They've definitely been an extreme outlier, and that's also representative in their multiple as well. So I'm not sure it will impact the software narrative as much as what I would like it to do, because I don't actually think that the AI spend or the software spend is slowing down. We haven't really seen signs of that yet. Everyone's talking about that happening, but it really hasn't. And but Palantir earnings, I think, are going to beat. It's just by how much. Can they re-accelerate continuously on revenue? Like if we could see 85 or 86% growth rates, like it would be wild. Let's go ahead and actually bring that up. Palantir's earnings surprises from last quarter. So currently Wall Street is anticipating an 80% growth rate year over year. Okay. That's if Palantir can live up to what Wall Street is saying, and hopefully even better. So they need to, and I just closed my tab with everything. No warning, no nothing. I closed every tab because of a misclick. Unreal. Okay. That said, it's just my camera's in the way. I can't see where I'm clicking. Let's go to Palantir's earnings results and look at the surprises previously. Q1, we ended up beating on revenue, like surprise beat by 5.9%. EPS surprised by 22%. In the past, all the way since Q2 of 2023, we have surprised to the upside. 3%, 4%, 5.9%, 6.9%, 8.3%, 4.6%, 5.9% on EPS, 22%, 19%, 40%, 33%. The beats on the earnings per share have been quite high. Control Shift T. Is this going to close my... That did absolutely nothing. Control Shift T. Not doing a dang thing, guys. I appreciate the help, though. Maybe I don't have it on somehow. It reopens your last tab. It did not. I literally closed the tab to see if it would work. It did not. Alt F4. A real one, Matt. I'm not that new, bro. Okay. Guys, I'm on a PC. I'm on a PC. I'm not on a... Come on. I think I got an Android phone and I'm using a Mac desktop here. NVIDIA all day. Make sure on an active window you were on. I don't I don't have any shorts on Apple, no. I actually have a little bit of Apple in the community portfolio, but that's pretty much it. By the way, we didn't talk, this is a little off topic anyway. Upstart's origination volume. They update this every month. We ended up seeing quite the large growth last quarter as well, but They ended up essentially showing up $1.4 billion of total originations, up 34%. Okay, so another really big month here. It's been big for the last like 3 or so months where we've shown this sort of, I mean, the growth has slowed a little bit. We were showing like 50% growth rates before. But still, very, very big sign here from Upstart. I'm curious if SoFi is also seeing similar origination levels. But I mean, they already did like $11 billion in personal loans last quarter alone. Pretty wild. I promise you it should work. I believe you. I'm not, it's just not working for me. When are you getting a Pixel phone? I think this week is when they're supposed to show off their new phones, right? This is the new Google event this week. It's like early August. So depending on how nice it is, I might end up getting it. Yeah. Okay. We were looking at Palantir, though. I got to reopen everything. Ugh. SPY's still doing well. Up 1 point, almost 1.6%. Sweet. Okay. And no news since the Iran situation. Trump was talking earlier. I don't think he's live anymore. And Neil should be coming on in the next few minutes as well. Just go to history and open all tabs. That's all good. Anyone interested in any of the other companies that are being shown off today? Like Snapchat, for example. There's been great reports from advertisers or social media platforms. Reddit did well. Meta did well. The stocks were a little bit hesitant, though. You know, is Snapchat going to end up surprising the market? I think traditionally it hasn't really. I'm pretty sure I've seen Snapchat dump more than it's pumped on earnings reports. It's dumped a lot of times. Not always because they miss on earnings drastically, but I find they always make some comment or stock-based compensate. Like it's always like some weird thing, but then they have like daily active users that remains just so unbelievably high. They've had an earnings surprise the last 7 quarters, but like take a look at this. This is the interesting part about a company like Snapchat, for example. Like whenever we compare them to companies like Reddit or Palantir, which we've shown off earlier today, and the surprises are 6, 9, 12% beats. It puts it into perspective whenever you have a company like Snapchat that their earnings surprises are 0%, 0%, 1%, 0%. Like, you know, those beats can compound pretty quickly. But ladies and gentlemen, I want to go back to talking about Palantir. Joined with me is the great and powerful couch investor. How you doing, Neil?
I cannot believe I joined and you started talking about Snapchat.
It's wild. They're showing off earnings too, though. Is there a chance that Snapchat ends up? Yeah, last quarter they, or actually this quarter they're expecting negative 11 cents. Yeah, that's a little bit rough. Any chance that Snapchat ends up beating Palantir after earnings? Like
stock's reaction.
Yeah.
Maybe because it doesn't mean that Palantir won't go up. It just means that Snapchat goes up more purely because it has been beaten down by a lot, and maybe they'll surprise. I don't know how, but maybe they'll surprise with something on the bottom line. But yeah, I don't know. Snapchat, it could have been a much better business, but then again, I always come back to the same point. I just say he should have just sold, retire, and maybe do something like sell Snap and go work on your AR as a new company instead of Snap. But yeah.
So what do you
just saw
expect?
Reddit is up 11% today.
Should be up more. I'm not even happy with that. Still down since earnings day. What's going on?
Yeah, I mean, but it did take Meta a couple of days to go back to pre-earnings, so maybe this will happen as well.
I went through the whole earnings. I didn't see much to be worried about. I mean, obviously the Google traffic, like referral traffic, that's obviously a big concern. Daily active users slightly lower, specifically in the US.
Yeah.
Guide was low, but it's low every quarter. I don't know.
It's more about, I guess, sentiment. Plus, yes, the Google traffic thing. Also, the fact that they are working a lot on making sure that their feed is much better, right? That older posts get pushed forward because older posts can still be useful today. And that's still something they admitted, that their recommendation systems are not nearly as good as a Meta, which I'm not surprised because Meta is just the best out there. But yeah, it's more about sentiment. Also, this AI data licensing deal, how much can they charge for their data? Because it's quite clear that their data is quite valuable, because otherwise you would not see a reduction in traffic. Because you see a reduction in traffic purely because they pull the answers from Reddit and they show it in Google Overview. If the answers weren't good, you wouldn't see it in Google Overview, but it is. So they have to charge more than just the 60 million. You've seen the post from the guy that says that he had so-called insider information, but it was just apparently an expert call that he had information from. It's not really confirmed from an insider, where he was talking about, I mean, the amounts were triple what we had right now. So from 60 million to maybe 180 million, 200 million or something just for Google. I don't know if that's a real number or not, but I assume they can charge way more.
Yeah. Hopefully it's way more, because my understanding is whenever that was first signed, it was much, much lower than what they thought that they could get. And that was back then.
Yeah. Plus, yeah.
Going to Palantir, what are your expectations for earnings?
They'll continue to crush it. The growth rates there are just insane. Can they produce 100% year-over-year growth for US commercial? Probably. I mean, I wouldn't be surprised.
Yeah.
Carp said that they're going to double this year and double next year. So US commercial only, not the whole business, in case somebody's confused. But I'm expecting, again, triple beats, because that's what they've been doing. Analyst expectations are always too low. They always sandbag anyways. I know 3 months ago they beat expectations. Stock was down 6-7% or so the next day. We are much lower, I believe, today than we were 3 months ago. But yeah, I don't see how they don't crush it. Like, they've got so much momentum. They're becoming more profitable and they are growing faster than before, which in a so-called AI is disrupting software is unheard of. Although don't think you can put Palantir in the same software bucket as the rest, but okay.
Yeah. That's the thing, right? Is you start to look at the valuation of Palantir, and it's high, but whenever you look at who has the fastest growth rates and then who has the highest margins, Palantir is really high in those two metrics versus even the Datadogs and the Snowflakes and all the other ones that also sport very high growth rates. Palantir still puts them to shame. So you talked about accelerating growth rate. Do you see them putting up their highest growth rate this quarter, or do you think last quarter might have been the peak?
Across the overall business? Or...
Overall business. Yeah, I think we got 85%.
Yeah, 85%. It could be the same. It could be the same this quarter. Let me actually check. Honestly, it could be the same. It could even be higher, because if they truly expect to double this year and expect to double next year, purely just US commercial, then there is a chance they can do 86, 87% year-over-year growth, because the comps are, yes, getting a bit more difficult, but not that much more as of right now. The upcoming quarters, yes, then you're already at 62%, 70%, and then we near a peak, but that's a year from now at 84%, so we still have time. But for this quarter, why not? Like, why? If the market is expecting 80%, why can't Palantir deliver 85 or maybe even more? Which, when you think about it, is quite good. Oh, 85% year-over-year growth. It's normal.
Yeah. It's if, you know, Carp's comments are also going to come true. But, you know, historically, I don't think he's been wrong on too many assertions. I even think what was it? The 3-year, 30% compounded. Was it 3-year or 5-year? I forget.
I mean, at first, it was completely wrong because there was that close to no growth, etc. But then, okay, the acceleration just made up for it.
Yeah.
But now we have the, what did he say, free cash flow wise, $17 billion or so for fiscal.
Yeah, 15 to 18.
Yeah, 15 to 18. So if that's the goal, then I guess he is quite certain that they can reach it, which means they'll probably reach it and beat it. The thing with Carp is he likes to talk a lot. He's very, very confident, but at least he delivers. Unlike Elon, which is also very confident, but Elon, if he delivers, then it's never really on time. It's always late, but okay. At the end of the day, he delivers on most of the things, just not on time. With Carp, it's almost every time on time, or if not early. So
yeah. And even the sales for Elon, right? Like the Model Y is the best-selling car of all time, but the valuation already represented that almost. That it's going to be bigger than all car companies together. So the expectations are so high that even whenever you do exceptional things, it's still a little bit like, okay, well, this isn't even what I was hoping for. I was hoping for, you know, an ungodly beat. Whereas I think Palantir kind of felt like that in the 200s range, or even $100, but you know, went back whenever growth was like 30%. Here at 85%, still around 120, it starts to look extremely, extremely cheap, especially the fact that free cash flow and net income margins have probably since the last time that they touched $100, like tripled in the margin. In the margin, not the dollar amounts, in the margin. They probably like 9x in terms of the actual profit that they're bringing in.
Yeah, and I gave this example when you talk about a SoFi, and people say, oh, these guys bought it at a cheaper price when it was $6, $7. But then I said, yeah, but today it's actually cheaper than back then because today we have earnings. And the same can be said, like Palantir at 120 today is not the same as Palantir 120 6 months ago or 7 months ago or whatever, because today it is way more profitable and its growth is way higher than before. So
yeah,
completely different things. I actually bought more today. I know it's an earnings gamble, but it's shares. It's not options or anything. It's shares. Just wanted to increase the share amount. If we go down, it's a great report, then I'll buy more. And if we go up, then at least I don't have to pay more. So
yeah,
I don't know what will happen with the stock. I just know that they'll crush the quarter. But we'll see what the market does tomorrow.
I hope we go up. I think we're going to go up on earnings. If somehow we go down, I'm going to have to buy more. I mean, assuming that what I imagine from the quarter actually happens.
Yeah.
I don't know. I think the comments that he made about the 15 to 18 billion, do you think any of these longer or even midterm comments that Alex Karp has made will be reiterated this quarter and then bring more confidence? Like the 100% growth and the free cash flow comments were said outside of Palantir. Like that was on CNBC and, you know, comments like this. Do you think that he's going to make more of a real midterm guidance call?
My only issue with the Palantir quarters is that we don't have enough analysts joining the call. So usually you would have a couple of analysts and one of them would definitely ask these questions like, oh, you just said that you could reach between 15 to 18 billion. Is that still the plan, or is that something that slipped or whatever? Now, like, who's going to ask it?
Yeah. That's my only problem with the Palantir calls as well, is I find there's such a long period of time where it's Alex Karp almost doing a celebration of their report rather than actually talking about what happens next. It's like retail and I, like, we stuck together. These are the rules that we live by. This is why we're doing it, blah, blah, instead of actually just talking about, where we're going next. I don't know if that's shared sentiment across the Palantir community, but sometimes I just want to know that this company's going to continue to grow, because then if Wall Street can end up increasing their numbers, the stock will go up, a lot
Yeah, 'cause
quicker.
free cash flow estimates right now for fiscal 28 sits at 9 billion.
Half.
So, yeah. So,
That was the only concern that I saw. It's like, he didn't actually say, he said free cash flow over the next 2 years is going to be 15 to 18 billion. Did he mean cumulatively or just for 2028? Because the earnings or the Wall Street estimates, he said it was very easy. Just look at what, he said, just look fundamentally what it is over the next 2 years. Well, it's not easy to find that. No Wall Street analyst is seeing what Alex Karp is seeing, but it does line up to 15 to 18 billion for the cumulative 2 years put together. Do you think that that's what he was saying?
I mean, the quote is, we have more business than we can supply. If you just look at our financials, you can see 2 years out, 15 to 18 billion dollars in free cash flow. So yeah, it could be cumulative free cash flow instead of we are going to reach 15 to 18 billion dollars in free cash flow. 2 years.
Because I was looking at the estimates and I was like, man, there's not a single analyst that's even remotely close to those numbers. Like, not one. And it's not easy to look out and see that. I don't know.
But yeah, 'cause on
Hopefully
the other
we hear
hand,
more about that, though.
Honestly, we don't really hear much during the calls anyways. But if they can double US commercial this year and next year, then okay, then maybe it is possible. But
now, what about across the pond? What's happening with Palantir on your side of the world?
Apparently everybody's trying to revise, right? I think in the UK, the NHS, so we're again trying to look at what they can do, maybe diversify away, because apparently some of their employees are not happy, which I guess they're not happy because they're saving more lives. Well, they use Palantir. I don't know. And then you have the French and the Spanish folks. Okay, I mean, they just have to look at what is happening inside their own country. Maybe they'll make better decisions. But yeah, international growth was not great. But then again, I guess if you go further out, Japan, South Korea, things are looking a bit better there. I don't know, when you look at the use cases and you see the results, right? The hospital results, things are like, how can you just say, oh, we don't like Palantir because we believe they steal our data and they spy on us? Like, if your goal is to save life, then just go with the best solution. If this is the best solution, just take it.
Yeah. No, I agree. Now, outside of Palantir, we've got AMD tomorrow. There's many amazing earnings over the next week.
Mm-hmm.
What else are you paying attention to?
I mean, this week we have, you said tomorrow AMD. I think Wednesday is a crazy day.
Crazy day.
Tomorrow is also not bad at all. So you have AMD and SpaceX, but I'm more interested in AMD because I own it. You have Zeta Global as well tomorrow. Then on Wednesday, you have Shopify, Uber. I own Uber, so I would love to hear more about what's going on there. They'll probably talk about their AV partnership with Waymo, what the report said or what the report didn't say. And then after hours, we got SanDisk and Western Digital, which of course could impact all of the memory names and maybe the sentiment around semiconductors. But I don't own any of those. I just own Mercado Libre and Axon, which also report on Wednesday.
Yeah, I actually forgot about SpaceX tomorrow. AMD, Zeta, SpaceX. SpaceX is so new that I didn't even have it marked here. What would you guys prefer to listen to tomorrow? I was planning on listening to AMD, but maybe SpaceX might draw a little bit more interest. I'm not sure.
I mean, I'll probably be doing AMD with Jose and Amit because, I mean, that's what we own. SpaceX definitely is going to be interesting, but then again, if it's again Elon in the earnings call, then we know that it's going to be, trillions of dollars. This, Mars that, Optimus this, Optimus that, XAI. The thing that's interesting is that we are going to have a huge unlock of stocks pretty soon.
Yes. Yeah. Without the performance kicker, because that was, I think it was like if the stock gets like 175 or something at earnings, that even more shares would have unlocked.
Yeah.
But quite the opposite happened. We are lower than IPO price. Wednesday we have, and you guys aren't going to change my mind. We're listening to SanDisk on Monday. SanDisk Monday, but we also have AppLovin, Mercado Libre, Duolingo, Axon, Dave, Chime, Block, Joby, all this stuff. Western Digital as well. Wow.
Mm-hmm.
And then Thursday's not too bad. We got Airbnb, The Trade Desk, Cloudflare, MP Materials, DraftKings. I don't even know if I want to listen to any of those.
No, really that interesting. Like, it's just going to be interesting to see the results for an Airbnb and definitely the Trade Desk to see if they're doing a bit better. But other than that,
sure, yeah. So maybe I might join you guys for AMD then. Even though I don't hold it, I'm one of the enemies, the NVIDIA spy.
But everybody else owns NVIDIA as well.
Yeah, that's true.
You own Shopify, right?
Yep. That's Wednesday morning, I think.
Yeah.
It's one of my biggest names. Fingers crossed on that one, but most importantly is NVIDIA for me. But I got a little bit of time to wait around to see what's actually going to happen with that name.
What is it? End of August, as always, I think.
Yeah, it's a little bit, but every day from now till all the way to NVIDIA, there's going to be some company like me and you could probably do D-Local. The day before we have Cerebras. The day before that CoreWeave. The day before that Rocket Lab. It's just packed.
Nebius is the day after CoreWeave. Nebius is 12th. I think CoreWeave is 11.
Is Nebius the 12th? I don't see it here.
12th of 12th Wednesday.
Oh, am I not following it on this? No, I am. I don't see it here.
Yeah, they announced it last week, Thursday, I think.
August 12th, 6 a.m.
Mm-hmm.
I see. It was in the morning. I was looking. Yeah, okay, my bad. Of course it's in the morning. It's in the morning every time.
Yeah.
Got you. So that'll be a busy week as well. I love earnings season, dude. It gets me so hyped up. Now, what do you actually think about the prices of some of these Neoclouds? CoreWeave's up 19.2% right now to $85 a share, and Nebius is up 12.6%, $214 a share. How are you feeling about these moves and the AI market in general?
Nebius, last week someone sent me a message and it's like, Nebius is down 43% over the past couple of days. And I'm like, what? And I looked and yeah, it's true. But now Nebius is up 45% since the lows of last week in just a matter of a couple of days, which is insane. What's happening outside? Which is incredible. But yeah, this is the nature of these names, right? They can be up 30% in a day. They can be down 15, 20% in a day as well. So I'm not that surprised. I would have loved if it just stayed a little bit longer in the 150, because I was like on Wednesday, I'm like, okay, Thursday, if it's still at 145 or so, I'll buy. But Thursday it was up 30%.
Yeah.
Even though it was down 3% after hours when we were streaming. I guess it was Microsoft and Meta or something.
Yeah. AOI up 16.5%. Do you have any of the other component names? Photonics, memory?
Nada. Memory, just Micron.
Just Micron, my man.
Just some Micron left.
Micron's not even catching a bid today. On today of all days.
Micron was red at the start of the day, by the way. It was, I think, 770 or so. So, not bad of a reversal.
Not too bad. Okay. Did you see the report from Morgan Stanley that said Google is going to be paying $500 billion in capex in 2028? $500 billion.
how does that how do they reach those numbers? Like, how does that make sense from the capex number we have this year?
CapEx, I think, was 200. And then I think next year they have 350 billion. And then the year after that, they have 500.
Okay, so so they are the one with the high estimates when we look at capex estimates on Fiscal.
Yeah. Yeah, someone has to create the range, right?
Yeah, because right now consensus is 320 for fiscal 28, but there is like one, like the range is super big, but the upper side of things is still at 455 billion. But I guess they had to increase that. I don't see them going 500 billion.
Yeah, they would need to raise a lot of outside capital. It looks like they still do have a lot of cash, but definitely placing them free cash flow negatively, unless, of course, they can grow top line a lot there. Google Cloud would need to grow drastically. But it's likely not to grow faster than, or well, I mean, as a percent base, they're growing like 82%. So I guess maybe they absolutely could grow faster than that. But in terms of sheer dollar amount, it doesn't look like they'd be able to catch up.
Unless the chips business, like the TPU business, really picks up, and that's why they need to do that.
Yeah.
Which, okay, would be a very good thing to do, but I don't see how we go to 500 billion in just 2 years, less than 2 years.
But then what does that mean for the rest of the names? Like, what does that mean for NVIDIA and AMD? Or even Broadcom? Maybe Broadcom's even a better example. What happens to Broadcom here if they go from 200 billion to 500 billion?
Yeah, Broadcom would be a bigger winner here. Because I assume Google will continue to diversify away.
Yeah.
And grow the TPU business. TPU. Yeah. Yeah, but I don't know, 500 billion.
And then they came out with, I think, 1.4 trillion in 2027 total CapEx spend across big tech. So, maybe 350 billion of that's coming from Google, but then we still have Microsoft, Meta, Amazon, all of these names that are spending hundreds of billions as well. Way ahead of even what NVIDIA had called for. And they were the most bullish. Sorry?
1.7 trillion, you said?
1.4.
1.4.
Yeah. Which I think is ahead of consensus. But.
Yeah. I have the 120 gigawatts target capacity in 2028.
Which, how do you do the math on that? Are you just doing like...
No, they wrote it.
Gotcha.
I didn't do the math here. They just, that's their own projections. I saw this. It's where they also have their 3 frameworks for the return on invested capital, which honestly is extremely bullish if that happens. But yeah.
Citadel Securities says bull market drivers remain firmly intact, saying that this is the same company that called for rate hikes and then bought up Leopold Aschenbrenner's $45 billion portfolio for like 40 cents on the dollar. They said that July's tech sell-off and retreat by retail investors helped unwind the market's speculative excesses. Retail posted its largest week of stock selling since 2022, while assets in levered ETFs fell 28% to $154 billion, and equity funding costs dropped below their one-year average. Isn't it so funny? Retail posted its largest week of selling since 2022. It's never 2021. We're never catching the tops or anything like this. The retail investor calls the bottom. I'm telling you, calls it by being wrong. He now sees the market shifting away from flows and positioning towards earnings, corporate demand, and the macro backdrop. Earnings continue to surprise to the upside. Valuations have become more attractive, and corporate buyback demand is set to accelerate as earnings blackout windows expire.
Of course, I would say the same if I'm up 45% on all my AI names after making sure they all crash so I can buy the whole portfolio.
But do you think that that's the same person that is in those, like that's not Ken Griffin saying that, No. Do you think that analysts at Citadel Securities have any relation to the portfolio purchasing departments?
See, that's one of the things that I always find strange, because also with fintech names, you have like one analyst that is either bullish, bearish, but then he works for the company that is doing the exact opposite, which to me was always strange. But I guess it is what it is. I mean, if we're going up and up and up right now, fine by me.
Yeah. Kalshi just came out. Wait, one sec. We have to listen to this. I think Kalshi just said that New Yorkers are up on their platform. Real quick.
If you add up all the profits and losses of New Yorkers.
Oh, it's a little quiet. Can you hear that though?
If you add up all the profits and losses of New Yorkers so far this year on Kalshi, what do you think that number is?
Over $1 billion, over $3 billion.
Well, they made $200 million. Plus $200 million. Right? Obviously, Chris Christie and the gaming guys come in here and all these customers are losing on Kalshi, etc. They have made over $200 million because New Yorkers are smart and they're doing a good job. You know where that's not possible? On the sports books. That is impossible on DraftKings or in a casino. It's impossible in the gambling.
Meaning that the house always wins.
It is impossible.
The house always wins.
They ban the winners. It's impossible for that number to exist. Actually, that number is negative $200 million for the sports books in that same period. So when we talk about customer protection, what exactly?
Let me ask you a different.
Yeah.
What do you think?
I mean, it so happens to be that on the sports books, they are down 200 million, and on Kalshi, they're up 200 million. It's like,
it's a good
what
quote.
are they? What? I don't know.
In one very specific state, though, right?
In New York, and what's the time frame? Is it just 1 week? Is it 1 month? Is it one event? Like what event? And the 200 million, like how
I think
many accounts?
that's total across the year so far, is I think what he said. On the platform for 2026.
200 million year to date, New York only. Okay, but let's see. It's 200. Okay, it doesn't really matter, but it's 200 million from, I don't know, probably tens of billions in volume or whatever. But they always try to put themselves in the other category, which is, we're not a casino, we're not a betting platform. But at the end of the day, you are. Just try to be maybe a more posh term for betting, but I'm predicting it will land on red or black. Come on.
Yeah.
It's the same.
What percentage of accounts made money? I mean, just from the you need another person. You're not buying from another company, so every customer would be winning and losing. So I would say something probably along the lines of 48% of people make money on Kalshi, assuming that the other 50% are losing money and Kalshi takes their 2%. So
or there are huge whales that just make the majority of the money, and
that's probably true. That's probably true.
Because I think there was such an article that came out at the start where they say, only the big whales are making money on this prediction markets platform. Maybe it wasn't true or not, but I'm pretty certain that I read something about that. But I don't know.
Yeah,
it's unavailable here, so cannot try.
But aside from Citadel saying those comments about it being like we can always say, hey, you know what? Of course you'd say that. You have an incentive or something like this. Do you believe in those comments that the market is, there are attractive rates in the markets today?
Yes.
And that could also be seen in the AI trade and these sort of things, or is it completely outside of the AI trade where you see really attractive valuations?
I mean, is Meta not attractive today?
I like it.
Think. Yeah, me too. I think NVIDIA is also attractive today. I bought Palantir, so I have to say it's attractive. Otherwise, I'd be dumb. But yeah, I think they're attractive. Look, if the thesis works out and these companies are going to be making 20 to 30% EBIT margin on their cloud business or AI cloud business, then of course it's attractive today. Even a CoreWeave or a Nebius or whatever. Yes, it's attractive. Are there super expensive names in it? Yes, of course there are. But It's been like over a year or so where we always say, oh, it's a bubble. It's not even close to what we had just 5 years ago. Like in 2021, I made mistakes. Yeah, I bought things that I shouldn't have bought, but I can say then today and back then, you can't even compare. In 2021, I don't think there was one name that was attractive.
Yeah. No, the valuations have certainly changed. It's looking right at the close though here, NASDAQ may be selling off a little bit. I'm trying to find any news story. I don't see anything just yet. But at least Tom Lee said that the S&P can hit 7,800 this month alone. Maybe that gives people some reassurance.
I mean, he did say that. What did he say? That 2027 is going to be one of the best years in the stock market or whatever.
Correct, yeah.
Yeah, but okay, he also said that ETH and I don't know what crypto and are going to be reaching tens of thousands or thousands of dollars. You hit some, you miss some, whatever. Everybody makes predictions, and there'll be I'd rather be a Tom Lee where you're bullish most of the times, which means you're going to be correct most of the times, than a broken clock like Barry, like Michael Burry or Ray Dalio, who are predicting 90 of the last 2 crashes. So.
Isn't that funny? If you're bullish, you'll just likely be more right than wrong. Like you said, you're probably going to be, if you're bearish, you're going to be right like 30% of the time. And if you're bullish, you're going to be right like 70% of the time.
Yeah. And when you are bearish, like what's your return? Your return can be maximum 100% if the company goes to zero. So you're looking for a gain of 30, 50%, 60%, maybe tops every now and then, instead of just being a bit more positive and looking at great companies for the long term where you can be making triple digits returns if you're long-term investors. Like it never made sense why specific people only focus on, oh, it's a bubble, we are shorting this. Like maybe start studying companies and invest in the long run, but I guess they cannot do it. Like why is Michael Burry not invest? Okay, he is. Just in all of the broken stocks he can find, he just, oh, I like Adobe because it's cheap. I like PayPal because it's cheap. Okay, fine.
Yeah.
Cheap companies. But this guy for the past decade plus, the only thing he can do is just be negative on the market every single time. Like go long on some names.
You know what? If you're a mega multimillionaire and that's what's gotten you there, it's hard to argue with, hey, this is the type of company that I know how to find or whatever. And you can miss out on the markets, but people will follow you. And like just from a career path for him, it's clearly working.
Of course. Now he has his newsletter that he can monetize and make more than his own investments. So.
Yeah. Like he's just gotten so popular, which is not, I don't think is a common way for fund managers to make a lot of money. Is based off their popularity. It is obviously at the top echelon, but Burry is not at the top echelon, and he's extremely popular.
That's what happens when Christian Bale.
When Christian Bale plays you in a movie, you get popular for running a smaller firm. It's true. But SoFi here above $18 on the day. We reported on SoFi's earnings together. A stark contrast, up 10% than it was whenever it was like down 10% on earnings. Same numbers, same, like everything's remained the same. And by the way, whenever we got that the Fed was not cutting rates, SoFi didn't even move on that news. It's moving now, but I know a lot of people during that earnings call that said, you know what, enough is enough. I'm selling out of this name. And it's a little bit sad to see that sometimes. Capitulation in retail investors. Yeah, the bell. Yeah. My bad. Ding, 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 ding. You're right. The market is closed.
Man, SoFi at 18. Is this the last time you can buy SoFi at 18? Well, I don't know. It's been at 18 so many times this year.
Yeah, I don't call for that anymore. Who knows? Let's get to, so Palantir, these numbers are going to be coming out. Are you joining me for the close here?
I mean,
Are you
what do you mean?
sticking
I'm
around? What are you
joining.
doing?
It's already close.
No, I mean like for Palantir's earnings call and stuff. Palantir is already up 0.9% in the after hours, up 1% now. 127. Nice green candles here. Let me get the numbers here for you. Palantir, nothing just yet.
I mean,
Okay, great.
If you're staying live, then I guess I will stay. Yeah.
Oh, dude, I'm live till 6:30. Snapchat we've got on running. What else do we have? Okay. We have Grab as well, but that's not till much later.
Yeah, Grab is in the middle of the night for us.
Yeah. Okay. Snapchat down 3%. I mean, it's kind of what I expected. Palantir to do very well. Snapchat to, somehow disappoint investors. What is new?
Indeed.
Seriously, though, that feels like every single quarter that happens.
Yeah,
and then it's like the PayPal thing where it just keeps getting cheaper and cheaper and cheaper. And so although they're missing earnings, it looks just as good because not only did they get worse earnings, but then the company got much cheaper. It's like a death spiral.
Cheaper, but still losing money.
Yeah. On semi. I don't have the numbers just yet. That said, the NASDAQ did close up 2.13%. S&P closed up 1.48%. Really good move here today. I'm on the Palantir earnings as well. I don't see anything just yet. Vertex was another one. Vertex. Pharmaceutical up 1.6%. Revenue is up 12% year over year. Guidance improved versus expectations. Net income beat versus expectations. It looks like a triple beat from Vertex here. AEIS. Advanced Energy also recorded record earnings, better than expected guidance as well. That stock is up 11% right now.
There's still nothing on Palantir.
Nothing. Diamondback Energy. Okay. Sorry, I'm just trying to plug in a couple of these other ones. Sterling Infrastructure also up 2%. We'll get this company's earnings here in a moment. Wow, I wonder if Palantir, like the numbers actually didn't get leaked just yet, and it was just like a little bit of jitters on earnings. I was really hoping Bloomberg got the numbers first. Stock's actually red now. Wow. Flipped red. Nope, we are green. That looks real. That looks real. Up 3%, 3.7. Oh my gosh. Let's get these numbers. Oh man, I want higher than 85% growth more than anything in the world.
Okay, so Palantir adjusted EPS 41 cents. Estimated one was 35 cents.
Sweet.
As for revenue, no idea. As
Stock's
for
up
revenue,
4.5% now.
$1.94 billion. Estimated number 1.8.
Yeah.
So what do we have?
Yeah, like you said, 1.94 versus 1.81 billion on Palantir. Trying to see what the growth rate on that is, but that definitely seems higher than 85%. Operating profit was 4. Oh, sorry.
Here, I sent the link in the private chat for the tweet.
Thank you. I just have some other stuff. Adjusted EBITDA 1.2 billion. The estimate was 1.09. Yeah, Palantir sees full year adjusted operating profit of 4.9 billion. The estimate was 4.5 billion. But revenue grew 93% year over year and EPS grew 153%. Buying this company at 107 or, whatever my lowest buy was, I think is going to turn out to be an amazing little pickup here. Even under 130, I think it's going to be a little amazing pickup. This company is growing by 93%. Another major beat versus what Wall Street was expecting.
Not too bad.
Yeah.
Not too bad.
Okay.
Let's see now if we can get the full thing. I think that usually takes a couple of minutes.
Yeah, it's not always the fastest for them, eh?
You would think it would be extremely fast.
Hopefully the mics are working. Hopefully, we don't see Carp getting handed multiple microphones. It's cutting out and we're missing a little bit of what they said. That I'm praying for.
Okay. We do have more info, actually. So,
what do you got?
Are you in the Cactus Jacks channel thing on WhatsApp?
Yeah.
So he posted like a full guidance post as well, key takeaways, etc., etc. And
I can't really pull it up though.
Wait, so let me.
Well, U.S. commercial revenue accelerated to 149% year over year. Rule of 40 reached 155%. What was the net dollar retention?
Wait, not this thing. This is just crazy.
No, I have it. You didn't need to post it in the private chat. I'm just saying I can't put it on screen.
Yeah, no, I copy pasted. I wanted to copy paste in something else. It copy pasted in the chat.
Oh my gosh, stock is up 8%. Roy called for a dump. Get that guy. Obviously, he loves the company. He's a huge buyer. He's just he was worried that the stock reaction might be a little bit mixed. But no, we got great financials and a great response here from Wall Street. They can't, like that. What's that movie? They can't keep doing this. Like, that's how I feel right now, where I'm like, how does it continue every single quarter to blow away expectations by like high single digits or low double digits based on revenue or EPS every single time?
I guess that's why we pay a premium to own it.
Yeah, but it's gotten cheap.
Yeah, the premium argument goes away, but
Alex Karp said the demand for sovereign AI has been unleashed, highlighting the 149% U.S. commercial growth and stating that Palantir is uniquely positioned to convert AI capabilities into measurable economic value for customers.
Their fiscal year 26 guidance at the midpoint is 8.15 billion. The estimated number was 7.72.
Wild.
That's probably also going higher over the next 2 quarters or so. US commercial revenue for the full year is expected to be up 134% or more. And adjusted free cash flow $4.6 billion at the midpoint. So
we still don't even have the full quarterly report just yet.
And now I feel much better by buying before earnings, but for the same could have been down. Could have been down.
Yeah.
For once it works.
Today is a good day. Today is a just day.
Fast forward tomorrow, everything goes down. Bad tweets, Hormuz this, Iran that.
Yeah. On
All
Semi
out of the
also up
door.
5.7%. Snapchat now up 11%. They turned that around. Thank gosh. Just as we were saying that Palantir goes up and Snapchat goes down, Snapchat is winning. We talked about that. Who's going to win more? Currently, we'll see after the call. But Palantir maybe giving back some of those gains from up 9 to now up 7%. I don't care. I don't care about what the stock does at this point. We got the numbers. Wild.
What did the Snap report for them to be? So they double beat, okay.
Yeah, revenue up 5%, EPS beat by 17%, but they expected negative 12 cents. They got negative 10.
So they're still losing money.
Yo, yeah. Yeah. On Semi, double beat as well. Smaller beats. EPS beat by 3%. Revenue beat by 1%. Now we're just waiting for the presentation from Palantir and then the call at 5 o'clock. Let's see if CNBC has it. Maybe they have some numbers as well.
How is Snapchat still losing like $163 million a quarter? I just...
Brother, no idea. Alex Karp is coming up on CNBC here, probably after the call, I assume.
At 5 p.m. Eastern. Yeah, and what a pop in the stock after hours in the back of these results. Seema, thank you. Seema Modi.
Right.
To the risks of own nothing, where exclusive also revenue
Where did
topping.
it start? I don't know.
Dan Pickering saying the good news already baked in there with the stock rotate into.
So Palantir's second quarter earnings coming in well above Wall Street consensus, 41 cents adjusted for the second quarter versus the 35-cent estimate. Revenue topping expectations, 1.94 billion, driven in part by its U.S. commercial business, which grew nearly 150% year over year. So that's a higher growth rate than the prior quarter. The defense tech company also raising its full year guidance really across the board. CEO Alex Karp doubling down on his criticism of Anthropic and OpenAI, and in our exclusive interview with the CEO, who said, "We have people trying to drug addict us to a future they believe they control." He adds that he spent a lot of time with Dario Amodei, that's the CEO of Anthropic, and they want to tell you we have to march into a future where we own nothing, where our businesses aren't profitable, where none of us have jobs, where our adversaries win. He says Palantir and our allies are guiding into a future where you have growth and jobs. Separately, Melissa, in a letter to shareholders, Karp says a global movement is emerging and that organizations are awakening to the risks of handing the creators of the language models their keys to the institutions. Bottom line, he's saying this pivot to open source is happening under this whole debate around AI sovereignty. The company is benefiting with that partnership, Melissa, with NVIDIA, with that commercial business revenue increasing, again, nearly 150% year over year. You'll have more of my exclusive interview with Alex Karp coming up at 5 p.m. Eastern.
Yeah, and what a pop in the stock after hours in the back of these results. Seema, thank you. Seema Modi. On Semi earnings.
What do you have any numbers yet? Anything like this?
No, nada. Usually we do get maybe the letter first, but always for...
Yep, got it.
Voilà.
Got the presentation. Business update Q2 for Palantir. Rule of 40 now at 155. They're sporting it higher than NVIDIA, but here's the problem, Karp. They haven't shown off their Q2. You're comparing against Q1. U.S. revenue grew 115%. U.S. commercial 149. U.S. government up 90% year over year. Up 18% quarter over quarter. Rule of 40. Total TCV grew 49%. That's at the bottom. I'm looking for remaining deal value grew 124% year over year, or 27% quarter over quarter. Highest ever total U.S. commercial contract value, $2.13 billion, up 153% year over year. Adjusted free cash flow margin of 63%. That's $1.22 billion. Oh my God. Here, we'll look at these in a sec. I just want to keep seeing some of these numbers here. And then we can read through some of these. Financials. U.S. commercial deals closed of 1 million or more, 1.7x year over year. U.S. commercial 1.6x for 5 million or greater. Contract signed. U.S. commercial customer count grew 35% year over year, or 6% quarter over quarter. Wow. GAAP net income passed $1 billion in Q2. Oh my gosh. Operating income of that amount was 912 million. That's the rule of 40 over time, guys. Who would have thought it could have gotten any better? Who would have thought? Let's see what else. We talked about the growth here. Government revenue grew 79%. Commercial revenue grew 110%. They're both pretty well the exact same size now. 990 million versus 945 million. Okay. Q2 2026 adjusted operating income was 1.2 billion. This is their adjusted operating income, representing a margin of 62%. That's up from the 60% last quarter and 46% margins year over year. How do they keep doing this? Genuinely. This is one of the most spectacular companies I've ever seen in my life.
Those were a lot of deals.
$9.2 billion in cash. Up from, what was it, 8 billion last quarter? They added another $1.2 billion in cash. Third quarter, I need to look at this. I don't know if you have a spreadsheet right now, Neil, but what does the growth rate on $2.16 billion of revenue look like for Q3?
Let me check.
Full year, we expect revenue to be $8.15 billion in revenue. Free cash flow of 4.5 to 4.7 billion. That's full year 2026. 4.5 to 4.7. I just want to put that up against Fiscal AI's, what they said for full year estimates from Wall Street. Full year 2026 was supposed to be 4.3 billion in free cash flow. They say 4.5 to 4.7, roughly a $300 million beat on the guidance, which is likely to improve over time if you take what they've done previously. Net dollar retention 157. 157%. I'm going to flip my desk, eat my shorts, eat my hat. All of the things that I do whenever I don't know what else to say.
You said 2.16, right?
For
the quarter.
2.16.
So it's 83% approximately.
Wild.
Yeah, because analysts are expecting 69%.
Yeah. Oh my gosh. Stock is up 9.3% right now.
So going back to the free cash flow question we had before, well, if they can double revenue like this, and the margins are that high, then yeah, maybe it is $15 billion in free cash flow.
And this is off the back of them constantly beating and raising. So the likelihood of them actually, this is just what they're saying right now for revenue. That's the wild thing. You know, last quarter they said, I think 80%, then we did 93. So now they're saying 83%.
Yeah, because look, for the full year, we're at 8.1 billion. Let's say it reaches 8.1 billion, and it could double next year. It could double next year. We're already at $16 billion in revenue for fiscal 27. Then let's say it's just 50% growth in fiscal 28. Then again, the free cash flow number for fiscal 28 is not that crazy.
This is genuinely one of the craziest companies I've ever seen in my last 10 years of investing. I mean, to put up last quarter, Q1, to put up 85% growth on a 49% quarter before it is unbelievably hard. To then put up 93% on a quarter that you did 48%, that's ridiculous. Then to say next quarter you're going to do 83% on a 62% previous, like, it's crazy. And then the likelihood, if they can do more than 93%, I'm going to make this one of my largest positions in my portfolio.
There was that other company that also increased quite rapidly. I don't know, this NVIDIA thing. Quite an interesting company, but this was also like it increased 93%, 78%, 69%, 55% year over year on top of quarters where they, of course, increased triple digits, but they increased the triple digits because the quarters the year before were, I think, negative quarters or so. But the numbers there were just like they were already generating above $30-40 billion in revenue and still growing 50-60%. I mean, what I said before, they increased revenue by 85% last quarter, and they're generating $81 billion. So,
Mountain here says, I own 29,000 shares of PTIR, which is a 2x long Palantir thing. I mean, Mountain, you own 29,000 shares of a 2x Palantir thing, and you donate me $10, bro?
Can't even buy at least donate a share.
Yeah, bro. I need to see $100 come through right now or you're banned. All right, you have 5 minutes. Find the funds. All right. Let's cover.
Where did you get the presentation from?
It was just on their events.
Events. I'm like on financials, which is usually where things should be. Yeah, no.
Quarterly results.
Yeah, no, I have it. Strange website. It's funny because when you click on financials quarterly results, it's not there. But when you go on events, it's there. Found a bug they should fix.
But this is just wild. I mean, if I see a large sell-off here in the next little bit where people end up questioning this sort of SaaS sell-off, lumping Palantir in with the rest of these
Salesforce,
with the rest of the Salesforce-like names, you know, you have to put money down. You have to have conviction on those types of sell-offs. Bring AI sovereignty to American construction. McCarthy, one of America's oldest construction companies, is using AIP to create a connected AI operating system. The platform will put McCarthy's 160 years of construction expertise into the hands of every field team, turning hard-won tradescraft into faster, sharper decisions that keep America building. I mean, I like that sort of sentiment, but I want to actually know like what they mean by that. Because what does that mean? 160 years of construction expertise into the hands of every field team, turning hard-won tradecraft into faster, sharper decisions that keep America building. I want to know a little bit of like what exactly that is.
I know you talked about the net dollar retention for a second there, but that
Mountain, bro,
just...
it was a joke, dude. It was a joke. Jeez, I've never banned anyone on this channel. You're safe.
Man, I should start using this strategy.
No, for real, Mountain. What's called? Email me. Send me your PayPal. I'll send you your money back. It was a joke, man.
Donate to a good cause. Where is it?
I did force him. Yeah. The bullying does work. I wonder what kind of control what's it called? Amit has over Triple V. You better, or else you're going to be banned.
Boom. $1,000 super chat. 50 gifted.
Rebuilding America's nuclear fuel independence. Nearly 100% of the world's uranium enrichment capacity is controlled by foreign governments. Centrist is using AIP to accelerate its Picton expansion and restore America's ability to enrich uranium at commercial scale. The nearly $300 million in savings that we have identified to date are only the beginning. That's wild, dude. That's
But
the
you
thing.
see, when you read this, you wonder how much they're paying Palantir.
Yeah. No, I agree.
In order for them to save $300 million, what is Palantir getting?
Well, I forget the company that they said. There was a company a while ago that was like, that stated, due to our change to Palantir, it like accelerated their growth rate. And it was a financial company that talked about like the billions of dollars that they had made from switching to Palantir. And I wasn't a shareholder at the time. And I said, if this can happen to every single business, then every company is going to want to switch to Palantir. Like no company will want to use it otherwise. But then you see the quarters that they end up putting up and you realize every company is in line to switch, and if they're not, they're falling behind. Because who doesn't want to save $300 million?
Yeah.
Within 62 minutes of opening, the program broke all prior USDA records for online farmer signups. It delivered over $4.4 billion directly to farmers in the program's first days. USDA used AIP to turn hundreds of fragmented legacy systems into a single governed ontology. Sounds like PayPal needs AIP here.
And PayPal doesn't need AIP. Just give me 1 day and I'm cutting like 50% of that company. Like anybody can make PayPal more efficient. Yeah.
This stock is now up 9.9%. Oh my gosh.
I mean, it makes sense.
I'm so happy I got into this name.
Yeah, I'm happy it went down to 107. And we got to, I got to re-enter again. You got to enter.
It wasn't just that. I mean, I've been buying anything practically like under 125-ish. But I sort of doubled at like 118, and then I sort of doubled again at like 107. And now I'm just trimming when or I'm not trimming, sorry. I'm adding when I have cash, but I rarely have cash these days. When CoreWeave is down and Palantir is down and Reddit ends up becoming down. Like, there's so many great names in my opinion.
Yep. Yeah. Customer, they added a bit less than the last quarter, but okay, doesn't really matter that much for now. They added 42 customers this quarter. Last
42 customers?
I think, yeah, it went from 1,007 to now 1,049. Oh, no, that's trading 12 months. Although on Fiscal, it doesn't tell me trading 12 months.
Gotcha.
But still, that net dollar retention rate of 157 is
wild. We're starting to get to numbers like I've seen back whenever companies talk about net dollar retentions of 130. I remember like Snowflake and these sort of companies that had like 140 plus. Like that was not it, or I mean, it was uncommon, but there were companies that were there. 157, I don't know if I can think of a company.
Yeah,
Like-
but you know, the 140 from Snowflake, it peaked and then it went down, but it's still quite good. It's 126 already for over a year and a half or so, which is still very, very good. If you can keep your retention rate at anything over 100 is good. Over 120 is excellent. So here we have 156.
Yeah. Oh my gosh. Okay. Oh, we don't have contribution yet? Do we have contribution margin? Where does that pop up in? Is that in their... Yeah, that's in the presentation, right?
What are you asking?
Their government and commercial contribution profit. The earnings from both of those segments separately. I don't see it in the presentation. Fiscal AI updates it. They just don't have those numbers just yet.
Maybe the press release doesn't, I think.
Yeah, they added 42 new customers. Billings climbed. RPO climbed as well. Here, let's show you guys what we're looking at here. And I'll also put on year-over-year change here. RPO grew by 102%. That's looking really good. Billings grew by 88%. Net dollar retention, 157. It's just going parabolic. Palantir's all-time high, I think, is 207, something like this. 207.52. Yeah. Wild numbers. We've got cash and cash equivalents here that grew by 56. Sorry, not 86. 56%, but the fastest growth rate that we've seen in the last 3 years.
So 1.4 billion extra quarter over quarter.
Wild. Absolutely wild.
I wonder what they'll do with the cash, like in a year or 2 or 3 from now. Like, I know every quarter we have, when will Palantir pay a dividend? Like, don't give me any dividends for the next 10 years or so. Because buying back shares, are they buying back shares? Probably not.
They can't, right?
They can?
Why?
No, they can.
They can't.
They still have their program. I don't know if they've used it already or not, but...
No, but I think they're a defense contractor. I think Trump banned them from buying back shares.
So what? So they retired their buyback program that they announced, like, I don't know when that was.
I think so. Yeah, I think he did
okay.
a ruling.
Fair enough.
Them and Lockheed Martin and all of those. And so I don't know if they're just stockpiling for whenever they want to do buybacks, or if they're going to do like M&A or just putting it back into sales and marketing and stuff.
Yeah, so because ideally I would have loved if Palantir invested in Anduril like a while ago.
Yeah.
Because what would they do if they cannot buy back shares? I guess dividend is one thing, or that's also not allowed anymore?
I think they can. I think they can do M&A.
But I don't want the dividend. But let's say the cash pile increases like from 9 to 20 billion over the next, I don't know, 2 years or so, maybe less, probably less. Yeah. What do they do?
Well, I think it's a temporary ban. So I don't, like buybacks may come back into vogue. But yeah, it is weird that also you can still do stock-based compensation and share count will continue to balloon, but you can't even buy back shares to buy back the dilutive amount. like just to keep the share count flat. I think that would be a fair ruling. Maybe that creates a reverse incentive where we end up seeing SBC balloon and
yeah, because now we have to wait, and maybe Palantir shares are going to, I mean, they're going to go higher. It's going to be more expensive for them to buy back their own shares in the future. So from a capital allocation standpoint like this, it doesn't make that much sense. But okay, it is what it is.
Straight up cash actually went down quarter over quarter. Short-term investments ballooned. I'm curious what is involved in the short-term investments. I'm pretty sure Treasuries is technically a cash equivalent, not a short-term investment. Yeah, I don't know.
Oh, I got a couple of super chats myself, so thank you very much, Ziv and Tacky Corny. I don't have 29,000 shares, but here you go. Well, thank you very much. I appreciate it. Voyager reported. I guess they're up a lot.
Don't forget to mention to Tanner Clickhouse.
I assume Tanner knows they're sponsoring Fulham FC as a front of shirts. It's a Premier League football team. I don't know if that's the best use of capital, but I guess.
I thought that was literally a joke because that's what Iren did and we all clowned on them.
I don't know. It's it is not a joke. It is not a joke. But yeah, Voyager is up 15% after hours. I did pick that one in my draft.
What, Voyager?
Yeah.
Piper Sandler initiated coverage on CoreWeave with an overweight rating and a price target of $151, saying that the AI infrastructure build-out is still early and CoreWeave should benefit.
It's funny how they all come out when the things are up, right? Because God forbid they put out that note a week ago.
Okay. Absolutely wild, some of these stats. I still didn't see anything more than the presentation. Do we have the... Yeah, I still don't see an earnings release or letter from Alex Karp for Q2 just yet, which is really surprising. Usually the letter from Alex Karp is the first thing. Nor do I want to read it because he writes like a crazy person. Yeah, like a poet, like really annoying to read.
Let's see. Usually they post it on their X account.
Okay.
They did indeed.
Gotcha.
They did. Yeah.
Let me make sure I find that.
Here, send it in the chat. They actually released it 25 minutes ago. We were just too busy being astonished by these numbers.
For real though, I don't know if I do want to read this.
Yeah, I'll just skim to see if he mentions something that's not in the numbers.
115. I'm trying to see maybe if he makes that comment on free cash flow again. Here, let's see if I can make it big for everyone. It doesn't like to fit the actual screen though.
How is your... Mine's white.
Oh, sorry. I think this is easier on my eyes, no?
Yeah, no, I don't mind. No, the part 3 is maybe a bit more. This is where he talks about the model that they're using. I mean, the business model, the tokens, and all of that. Basically, ranting again on the. We do not get paid for clicks or tokens or chats. The gamification of the most significant development in modern economic history seems to us misplaced, etc., etc.
Yeah, it's crazy. There are Marxist overtones and undertones to our business.
Quite an okay shorter than usual letter, I guess.
Yeah, actually, I didn't realize that. That's a much shorter one. I just went through ever so slowly. I didn't see anything on the free cash flow statement that he made. I don't know if they're going to be doubling down on that, or that was just a passing remark that maybe they didn't even wish to say. Because it was live. It's not like they published that on their own platform.
Yeah.
So they might not double down on that.
This is the sentence, we are paid and have always aspired to be paid as a derivative of value creation. So when we go back to the $300 million that were saved, I assume they're getting paid a good amount. What a company.
Yeah. Holy. Okay, so what are you doing with your shares currently? Do you feel that because it's up now, roughly 10%, maybe we end up opening tomorrow around the 140 range, that you feel like that's a good enough price to write covered calls? Or would you kind of still steer clear of writing against your shares at those prices?
We can use, there is a storm brewing here, finally. But it's the same conversation we had with Nebius, right? Because you write cover calls and then, I'm safe at 240. A week later, we're at 220. And you're like, what the heck is going on here? So with Palantir, I guess if we open tomorrow higher, it's 135, maybe 140, then I don't think you will be, if you take the 200 strike for, I think the next one is what, 21 August, maybe for September, maybe for October, 200. First of all, you'll have time. So even if we go higher, just roll them up and out maybe. And if we do hit 200 in 2 weeks, then I guess it's maybe overextended again, but you can always, that's the thing with cover calls, people think, if you want, you can just roll them up and out for these types of names. Of course, if it continues to go up and up and up and up, and you're out, you don't have any new options to write, then okay, that's an issue, but I guess that's a luxury issue.
With the market cap around, we're at 300 billion now. Is it the same situation as when we were at $20, $40 a share?
It's a much better company today than it was before. So,
but it like a company can always get bigger, I guess.
He believes he can be $1 trillion company. So,
yeah.
But
I don't know if I'm ready to write covered calls just yet. It seems cheap here.
I don't know what the premium will be. I know that the premiums with CoreReef and Nebius have been absolutely insane over the past
Palantir's was really high before earnings, and I'm sure some people have definitely wrote covered calls that maybe are risking of we're up 11.2%. You might be underwater on some of those depending on where you wrote them to. I'm sure some people before today felt pretty safe writing them to 140, and if they if we go to 145, then you're all right. You're losing those shares. It's not too far off. But the price reaction to this earnings was pretty freaking well received. We've gone from 122, I think we were last week, to now we might open tomorrow around that 140 range. We're going to get to 140 right here just in the after hours margin. We're 139.99 right now.
Yeah, I guess if you had the 140 or 145 and you see this, then first of all, if it's for August 21st, then you still have time because it needs to stick around those prices until then. And if it stays at 130 or 135 until then, the closer we get.
Yeah, it doesn't matter.
Yeah.
Even if you have to sell, it might be a tax burden or whatever, but.
Yeah, but again, just roll them up and maybe out if you want.
I'm not much of a buyer of options, Andrew, but I think covered calls are a little bit different. You you're playing with if you want to cap your profit. Like that's the risk. You're not really risking losing a ton of money unless you lock yourself in like super long term into a company that ends up going bankrupt later. I don't think Palantir is anywhere in that realm at all. Like,
Yeah.
you have to worry with Palantir that it's going to explode higher, not really that you're going to be locked in for months and it go down to $40. That's how I see it, at least.
Yeah, I mean, you have to, like, the strategy needs to make sense. Like, if your cost basis is one, let's say, random stock, if it's 120 and you're selling covered calls at 120 because the stock is now at 90, then what's the point? Like, if it goes higher, you lose the shares and you didn't even make anything. But if you bought at 100 and you're selling covered calls at 180 because the stock is already at 150 and it has a lot of momentum and the premiums are insane, then okay, then fine. And then if you want to keep the shares, then first of all, don't do the whole position. And second of all, just roll them up and out and you keep collecting that premium, which is something that has been working quite well for me this year. And it's a nice tool to have, let's say, especially if you need cash from time to time.
Yeah, on the really volatile stocks like Nebius, like I made a freaking fortune. Just
on Nebius, it's been insane.
You know, look at the share price though. We are continuing to climb. Palantir stock is now up 12.2%. It's been a long time coming to see some real love in Palantir's stock price, and this doesn't even guarantee tomorrow morning's price. You know, after hours are always a little bit more volatile. But this is still a good sign that people are taking in this call or taking in this earnings, and it's being pretty well received so far. I don't know what they could say during the call that would get people upset. What do you think could be the possibility there? I mean, considering that we know some of the comments around guidance already.
Yeah, nothing. Like the reason why the stock is up so much is because we know all the important numbers. Unless they start talking maybe about, again, 27, 28 or things like that.
But you think those will be bearish comments?
No, but maybe the market for some reason expected more, although the market is expecting way less. So yeah.
There's always the Wall Street numbers, and then there's this magical number that they call the whisper number, where they're like, yeah, we said it was going to be that, but we didn't really believe it.
Yeah. So,
wild.
I don't know, for the technical analysis experts, seems like we are going to go above the 100-day moving average tomorrow. And going into this report, we were sitting on the 100, but on the weekly. Apparently, a very important technical point is going above the 50 on the weekly, and that one sits at $153, which it was rejected a couple of times before. Once in June, when we hit 163 and then plunged all the way back down to 116. But yeah, we do have some momentum right now. But then again, momentum in the market can flip with just a post of DT and the situation with Iran. So,
by the way, guys, wait, what happened with accounts payable on their? Is this correct? It went from $8 million to $500 million. What's this about? What's something new that could pop up on Palantir's accounts payable that was not there before? Is it token cost or something? Like the way that they recognize that, or?
I am looking. No, not here.
That said, the stock is now up 13%. We're at 142 now. Piper Sandler just initiated coverage on Nebius. with a neutral rating and $224 price target 12 months out, citing early stage AI infrastructure demand and risks around its Vineyard data center meeting. Sorry, not Vineyard, Vineland. Their Vinland data center meeting, not Vineyard.
If you go to Fiscal and you look at the accounts payable for Palantir,
yeah,
like it exploded the last 2 quarters.
Mm-hmm.
Did they tell us why or not?
Yeah, because it wouldn't have shown up this. It would have been last quarter that they said something. I just don't remember. Oh my gosh, I can't wait to see tomorrow's price and where the PE ratios are going to be, because every single analyst right now is furiously, or they are rewriting what they believe that the guidance is going to be for Palantir. And hopefully we see more Q&A this quarter round than we have in previous quarters.
That's not going to happen. That's like...
You don't think they change the way that they do these calls?
No. And even tomorrow, the analyst expectations, like how many quarters do they need to be a bit more realistic? Because even going into this quarter, they were far behind.
Yeah, okay.
So
Call starts, by the way, in 7 minutes, ladies and gentlemen. Me and Neil will be here live listening to the call. And then maybe some commentary afterwards, but not too much later after the call. Can I run this, Neil?
Yeah, no, that's fine. I want to call it an early night today. Yeah, you have a dog, right?
I do, yeah.
Yeah, I was dog sitting today. Whew. Takes a lot of energy out of you.
I don't know. I do. I'm in a pattern of going on a pretty long walk in the morning and kind of tires her out until I'm done streaming, and so she's good.
Yeah, but this it's a puppy, like a 3 months old puppy, so still
got you.
Still a lot of energy, but so cute.
That's no way to talk about your missus. Oh, come on now. Do we have forward guidance? We do have forward guidance. They're calling for 83% growth on revenue. And did we take a look at the net income growth as well? I don't know if we did that one.
Maybe not. I'm just trying to figure out this accounts payable thing, but it does seem like because they're consolidating accounts payable, accrued expenses, and tax liabilities into a single balance sheet row that started in Q1. Voilà.
Okay.
That's
what
the
that
reason.
is then.
Yes.
Yeah. We also saw, let's see, free cash flow we talked about. That's going up 300. That got raised $300 million for the year. Revenue we talked about increasing. GAAP operating income and net income in each quarter of this year. That's in their... Okay. That's in their guidance. Just says GAAP. They just think they're going to be profitable.
Yeah, when they first turn profitable and then they start saying, oh, we expect to be profitable every single quarter. And I was like, yeah, cool. But now it's like, okay, no need to write this anymore.
Yeah, that's funny. Last year we did $1.1 billion in billings. This quarter we did 2.1. That is just wild. Now, what's growing faster? Is short-term RPO or long-term RPO? They're actually both growing. They're almost growing identically. They both doubled. Short-term RPO went from 1 billion to 2, and long-term went from 1.4 to 2.8. They both doubled. It is a fantastic business. Adjusted operating margin. This is quarter. I'm just going to sort of list out the last 8 quarters. 38%, 45, 44, 46. You can kind of, during those moments, you're like, okay, we kind of found where it's going to sit at. Then 51, then 57, then 60, then 62. Then you start to realize, like, oh my gosh, they've increased this by 50% in the last year or so. Wild. And similar thing with the Rule of 40, gone from 68% in the last 2 years up to 155. Okay. They only have 40% free cash flow? Only.
Yeah, and apparently 60% is debt.
Who's saying this?
The same guy who said they only have 40% free cash flow.
Okay.
Because I'm pretty sure that on slide, what is it, slide 26, it says we ended Q2 with 9.2 billion in cash equivalents, and US Treasury securities, and no debt.
That's interesting. Why would they lie right on their presentation whenever the guy in the comments said that they have 60% debt?
Yeah.
Why would he tell the whole truth, nothing but the truth, but Palantir
So help
lied?
the trolls.
Yeah. Okay, we have 2 minutes before earnings. Let me get this presentation up. And good luck to us all. It should be a good call. It's a video call as well for anyone listening audibly.
Mm-hmm.
You'll be able to actually see it. It's going to start with, obviously, their team. Alex Karp's not going to come on until after they've said all the numbers and everything, and he'll join for Q&A. Also give his own talk on the thing. But if you don't expect Alex, or if you don't see or hear from Alex in the first 10 minutes or so, that's perfectly normal. All right. What else do we need to say before we go live here?
Nothing. Expect Alex Karp in a plain white t-shirt.
Yep.
Very excited. Might be banging the table. You might not like it, but it's been like this for a couple of years now, so we all have to be used to this by now. Can the stock move? Yes. Do I expect the stock to move down so much? Probably not, because we anyways know all the numbers. So
yeah.
Voila.
Okay. Yeah, white t-shirt. That's great. Thanks for doing this and taking us through. What are your predictions? Well, I mean, the earnings are over now. I don't know. Do you expect anything from the call that we don't end up getting through the rest of the thing? I don't know if there's like a specific metric that I can think of that they say every quarter that's not put in the presentation. Obviously, there is snippets and really good things that they will say during the call, but I don't know if that's like a constant. Like you have to wait for the call to get guidance, or how some companies do it.
No, honestly, if he can, maybe if he does say something about 27, then I guess that's a plus. But other than that, usually they don't really add that much during the call. So again, it's an earnings call unlike many others because we don't have that many analysts asking questions. So
good afternoon. I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our second quarter 2026 earnings call.
Ladies and
We'll
gentlemen,
be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our third quarter and fiscal 2026 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our Q2 results are unprecedented, but entirely unsurprising, as the abrupt market shift in LLMs that we've been warning you about for years is now here. We delivered 93% year-over-year revenue growth, our highest ever. The story of this quarter is, once again, our U.S. business. It now comprises over 81% of total revenue and grew 115% year-over-year and 23% sequentially. Our U.S. commercial revenue growth accelerated to 149% year-over-year and 28% sequentially. And our U.S. government revenue grew a remarkable 90% year-over-year and 18% sequentially. These top-line results are accompanied by a Rule of 40 score of 155 and $1.22 billion of adjusted free cash flow. We closed 220 deals worth $1 million or more, of which 98 deals were worth $5 million or more, and 73 deals were worth $10 million or more, record highs across the board. These results are a clear indication of the profound value we've unlocked both for and with our customers who dared to cross the chasm with us. In contrast, enterprises that are not using Palantir are seeing their token meters spinning endlessly just to get slop without any correlation to value. This token model may be working for the labs, but it is not working for anyone else. It's breaking corporate budgets without results to justify the expense. And worse, companies are paying to give away their most important secrets, the very basis for their competitive advantage, ultimately contributing to the commoditization of their own businesses as their secrets become the training data embedded in the foundations of all future models. On our side of the chasm, what enterprises demand is AI sovereignty, owning the operational definition of the data, logic, actions, and security of their enterprise. An organization's data is its treasure. In its richness is the alpha. We are fully aligned with our customers, building a stack that enables the compounding of their alpha. Our deep alignment allows our customers' ambitions and our own to become one. As Kirkland and Ellis highlighted, quote, "Through our work with Palantir, we have built a new operating model for legal services, one that centralizes and compounds the expertise of our most senior lawyers. What used to take days for a lawyer to analyze, discuss, and draft now happens in minutes. This would be impossible without the ontology. We do not see this as a vendor relationship or a one-off endeavor. We think this is a revolutionary change in how our work gets done. This is what we do with our customers across industries, and the deals we are closing are a testament to the monumental shift in the AI market that's underway as we speak." In our U.S. commercial business, we closed $2.1 billion in TCV, with a 271% year-over-year growth rate on a dollar-weighted duration basis. A multinational technology company began working with us in the fourth quarter of last year at one operating company and expanded on their success with our platform to deliver revolutionary impact across their full portfolio, converting to a 3-year, nearly $370 million deal last quarter. Customers are decisive and bold about taking the next step with Palantir. A global asset management firm started working with us in Q1, then converted last quarter to a 3-year, $35 million TCV deal spanning asset management automation and investment lifecycle intelligence across 4 verticals. After an agent camp in May, a global software and services company signed an initial $15 million 5-month deal last quarter. And a leading nonprofit health system signed a pilot at the end of 2025, and then last quarter converted to a 3-year partnership at $37 million TCV. Our U.S. government business remains a source of extraordinary strength, with momentum across both defense and civil. We continue to take great pride in our U.S. government work, equipping our nation with the most advanced, battle-tested AI capabilities. For Palantir, this is our calling. Our customers are making the decision to go deep with us with greater urgency and conviction than I've ever seen before, choosing AI sovereignty over dependency and compounding their alpha in a way that their competitors and adversaries will forever envy. I'll now turn it over to Shyam.
Thanks, Ryan. Ryan just talked about the incredible customer momentum behind sovereign AI. I want to spend some time on the underlying product investments that positioned us for this moment. AIP succeeded because it's the best, most ergonomic environment for AI in the enterprise. It integrates mixed mammal AI teams across heterogeneous, interdependent workflows and delivers the fastest implementations that turn tokens into real economic value for our customers in complex, high-stakes environments. What makes it work is exquisite and layered. Data integration and transformation, ontology and actions, security and audit, workflows, agent SDKs, agent orchestration with telemetry and observability, evals and customer-specific benchmarks, AIP Evolve, and our latest investments in post-training, both supervised fine-tuning and reinforcement learning. Every layer builds on our foundational primitives, and every layer flows together. This infrastructure captures the rich, operational telemetry to feed the compounding loop, an automated model factory that runs inside the customer security boundary and accumulates intelligence in weights they control. Last quarter, I said tokens are the new coal and AIP is the train. Now our customers can build their own locomotives. AIP is where your sovereign AI is built, deployed, and compounded. We're excited for a new era, not one of bench maxing, but of bench making. The assumption that the frontier is actually the best performing is just not borne out in practice. Within 24 hours of bringing Nemotron Ultra into our stacks, we found 5 production tasks where a standard Nemotron Ultra model without post-training beat frontier models. This underscores that a handful of common benchmarks can be gained. That era, bench maxing, has ended. The new era is bench making. A customer-specific benchmark is not just a scorecard. It's a hill to climb. It's the normative orientation that directs your entire operational workflows and post-training pipeline. It defines what better means on your terms, for your business, with your strategy, and then everything optimizes against it continuously. And because the benchmark is yours, the trade-offs become yours too. AIP gives you the control plane to trade cost, performance, and latency against each other, and to decide where you run your weights versus theirs, workflow by workflow, continuously. Now you can have a continuous improvement cycle that compounds your alpha into your weights. AIP was built for this. We continue to see that our product is winning head-to-head. The others are focused on productivity. We are laser-focused on turning tokens into real economic value for our customers. The reality is that the market has created far more intelligence than it has converted into value. A more powerful model does not solve this problem. The limiting factor is the rate of AIP deployment. A major Silicon Valley tech company recently ran a bake-off, a frontier lab and its deployment team against AIP and our forward-deployed engineers. Remember, only Palantir has FDEs. Everyone else has sparkling sales engineers. The lab picked a ticketing automation problem and failed to deliver anything of value against it. We built agent swarms for each of our customers, proactively recommending marketing, packaging, and pricing changes to drive revenue and utilization. This work converted into a $10 million ACV contract. The lab was shown the door. Same customer, same timeline, same models. The only difference was AIP and Palantir's unique FDE tradecraft, and it was determinative. It was an incredible quarter in U.S. government, measured not just by 90% year-over-year revenue growth, but by mission impact. Maven continues to deliver for the Joint Force, from the factory floor to the foxhole. We had our first program in the Maven platform launched this past quarter, where a government program of record chose Maven as the platform that they will operate their program in, taking advantage of our open data standards, ontology, developer tooling, peering, security, and other platform primitives to go faster and deliver seamless experiences and capabilities to the department's chosen command and control platform. Maven has also continued to win as the developer and builder platform for the Joint Force, with over 25,000 builders. Uniformed service members, civilians, contractors, and companies are developing agents and applications in and on the platform at the speed of war. And for all that growth, our Department of War trailing 12-month revenue is still less than 25 basis points of the Pentagon's budget. Finally, last week we held our first American Builder Summit in D.C. to celebrate the Americans who stepped forward to join the American Tech Fellowship and to let them make the case that AI is creating jobs and prosperity by sharing their stories and showing what they built. We created ATF because the most transformative applications of AI that we saw were being driven by people without traditional tech backgrounds on literal front lines and factory floors. We now have over 1,000 ATF grads. One of our speakers, Jonah, who joined Tabit as a submarine parts manufacturer 13 years ago, straight onto the factory floor. He's a proud blue-collar worker who still turns wrenches for a living. And he built an AI application that took production planning from 30 to 40 days down to less than 1. AI alone cannot do that. It takes AI in the hands of the American worker, the tribal knowledge earned through success and failure on the line, the insights only they have. The models are commodities, but the American worker is not. I'll turn it over to Dave to take us through the numbers.
Thanks, Sean. We had a phenomenal second quarter, delivering our highest ever reported year-over-year revenue growth rate of 93% and our highest ever adjusted free cash flow of $1.22 billion, representing a 63% margin and 115% growth year-over-year. We surpassed billion-dollar milestones in GAAP net income, adjusted free cash flow, and adjusted operating income. Revenue in our U.S. business grew 115% year-over-year and 23% sequentially in the second quarter. Our U.S. commercial business accelerated to 149% year-over-year and 28% sequentially, and our U.S. government business grew 90% year-over-year and 18% sequentially. We closed $2.132 billion of U.S. commercial TCV bookings, representing growth of 153% year-over-year and 81% sequentially, nearly $800 million above our prior highest U.S. commercial bookings quarter. We are seeing the immense demand of enterprises recognizing the need for sovereign AI to retain full control of their alpha. On the back of this exceptional, continued strength in the U.S. and accelerating demand for our sovereign AI capabilities, we are raising our full-year U.S. commercial revenue guidance to an excess of $3.424 billion, representing a growth rate of at least 134%. We're also raising our full-year 2026 revenue guidance midpoint to $8.154 billion, representing 82% growth year-over-year, an 11-point increase over our full-year 2026 revenue guidance from last quarter, and our largest ever full-year revenue guidance raise. Turning to our global top-line results. Second quarter revenue grew 93% year-over-year and 19% sequentially to $1.935 billion. Second quarter U.S. revenue grew 115% year-over-year and 23% sequentially to $1.573 billion. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 67% year-over-year to $124 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 110% year-over-year and 22% sequentially to $945 million. We closed $2.337 billion in commercial TCV bookings in the second quarter, representing 118% growth year-over-year. Our AI platform continues to dominate the U.S. market as the only real choice for operationalizing LLMs, particularly as more customers demand full ownership over the data, logic, actions, and security of their enterprise. Second quarter U.S. commercial revenue grew 149% year-over-year and 28% sequentially to $764 million. We closed a record-setting $2.132 billion of U.S. commercial TCV bookings, representing growth of 153% year-over-year. Over the past 12 months, we closed $5.964 billion of U.S. commercial TCV bookings, a 117% increase from the prior 12 months, highlighting the accelerating demand for AI that creates real operational value. Total remaining deal value in our U.S. commercial business grew 124% year-over-year and 27% sequentially. Our U.S. commercial customer count grew to 653 customers, reflecting growth of 35% year over year and 6% sequentially. Second quarter international commercial revenue grew 26% year over year and 2% sequentially to $182 million. Revenue from strategic commercial contracts was approximately $400,000 for the quarter, representing 0.02% of overall revenue. We continue to expect revenue from these contracts to be less than $500,000 in each remaining quarter of this year. Shifting to our government segment, second quarter government revenue grew 79% year over year and 15% sequentially to $990 million. Second quarter U.S. government revenue grew 90% year over year and 18% sequentially to $809 million. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for our AI platform in government. Second quarter international government revenue grew 42% year over year and 5% sequentially to $181 million. We closed $3.4 billion of TCV bookings, up 49% year over year. On a dollar-weighted duration basis, TCV bookings grew 129% year over year. Net dollar retention was 157%, an increase of 700 basis points from last quarter. We ended the second quarter with $13.1 billion in total remaining deal value, an increase of 83% year over year and 11% sequentially, and $4.9 billion in remaining performance obligations, an increase of 103% year over year and 10% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 86% for the quarter and reflects an increase in costs associated with taking on cloud hosting for one of our government customers. While this change led to higher cost of revenue in Q2, going forward, we believe it will power faster time to value, drive greater efficiency, provide greater cost certainty to the customer, and enable us to expand their future workflows. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $1.194 billion in the second quarter, representing an adjusted operating margin of 62%. Q2 adjusted expense was $741 million, up 14% sequentially and 37% year over year, primarily driven by the continued investment in our AI platform and technical hiring. As in prior years, we expect a significant ramp in expense in the third quarter due to the seasonality of new hire starts and other product and marketing initiatives. We remain committed to investing in the most elite technical talent, as well as R&D for our product pipeline and sovereign AI efforts, all while delivering on our goals of sustained GAAP profitability. Second quarter GAAP operating income was $912 million, representing a 47% margin. Second quarter GAAP net income was $1.062 billion, representing a 55% margin. Second quarter stock-based comp expense was $265 million, and equity-related employer payroll tax expense was $17 million. Second quarter GAAP earnings per share was 41 cents. Second quarter adjusted earnings per share was 41 cents. Unrealized gains from our holdings in SpaceX resulted in a 3-cent tailwind to GAAP EPS and a 2-cent tailwind to adjusted EPS in the quarter. Additionally, our combined revenue growth and adjusted operating margin accelerated to 155% in the second quarter, a 10-point increase to our Rule of 40 score from the prior quarter, and our 12th consecutive quarter of an expanding Rule of 40 score. Turning to our cash flow. In the second quarter, we generated $1.216 billion in cash from operations and $1.22 billion in adjusted free cash flow, representing margins of 63%. We ended the quarter with $9.2 billion in cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2026, we expect revenue of between $2.16 and $2.164 billion, and adjusted income from operations of between $1.292 and $1.296 billion. For full year 2026, we are raising our revenue guidance to between $8.15 and $8.158 billion. We're raising our U.S. commercial revenue guidance to an excess of $3.424 billion, representing a growth rate of at least 134%. We're raising our adjusted income from operations guidance to between $4.889 and $4.897 billion. We are raising our adjusted free cash flow guidance to between $4.5 and $4.7 billion. and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Obviously, we are loving these results and loving what they mean for our customers and broadly speaking, the West. So reflections on how we got to 93% aggregate growth, just under 150% growth in U.S. commercial, and an aggregate growth of 115% in America, which is astonishing, even surpassing the already anomalous results we've posted in the past, and at a very significant scale. And the story really does begin at the beginning when we dedicated ourselves to our most important partners in the U.S. government, and we built products to deliver value for them. We delivered those value for them by looking at the world in its naked state. We did not have we did not have AI available. We had to work with NLP. So we had to develop forward deployed engineer model to extend the technology and deliver value. The nascent version of ontology was developed. Sham, Aki, others strapped BlackBerries around their head and made the code work in sensitive environments. And what we learned and what was built into this company is that there are things, values, structures that are more important than purely extracting value from a client. And we rejected the way in which we were being taught in Silicon Valley to build a software company. At the time, Palantir, of course, is now both infrastructure, software, FDEs, orchestration, and business know-how. So it's a completely different hybrid. But at the time, we were being told our job was to trick the clients into giving us money for something that made them attached to us, but really added no value. So essentially a parasitic model. And in the rejection of that, we fully aligned with our partners. Now, to do that, as we went through the years, we built PG, Foundry, Gaia, Maven, Ontology, AIP. Now we're taking the AIP stack and extending it for sovereign AI, which requires us to be able to orchestrate and fine-tune models to provide a completely sovereign stack to our partners. But what is the philosophical importance of that? We are offering a present that augurs to a future that we want to live in. What does that future look like? We have more rights in the PG frame. It's safer in the sovereign AI frame, which is arguably by far the most important because all these other things are downstream from GDP growth and GDP health. And what if we transform America into the only democracy that actually grows, where production is more efficient and manufacturing actually happens? What is that frame? That frame is not you are going to buy into a future where you have no job, where adversaries win, and everybody who does win is a small, tiny group of people living in a tiny place that somehow believes because they eat vegetables and they don't support war fighters that they deserve to have the total means of production of this country. And the rest of us should just sit back and absorb the cost of that revolution, which we're paying for. How are we paying for it? In the enterprise context, people sign up for token self-pleasurings, and that at a real cost, like other forms of self-pleasuring, where you are paying for the right for them to migrate your IP, your know-how, your expertise to their model so that they can build a competitive business that doesn't require your business, your people. And why are they doing it? It's actually being done for what they believe are moral reasons. They are superior to you. They deserve to colonize your enterprise. You deserve to be colonized. And Palantir, it's interesting, it doesn't work as well or as efficient purely on the alpha side as having an application layer, owning your compute. Witness, we built a partnership with NVIDIA. We're expanding our application layer. We are going to enter the market and already entering it in the classified space, as Sham alluded to, of fine-tuning models. So that the models actually fine-tuned by us in our enterprise on an NVIDIA stack outperform frontier models. And you own the weights, you own the alpha, you own everything. Every single enterprise in this country is going to either look at doing this, find ways of doing it, or at least avoid the alternative of unprotected interaction with frontier models. This is very dangerous. You were warned about this in high school, and now you're learning about it in your enterprise. And at Palantir, we are at the front line. We are in the front of driving this revolution. I am driving the business to grow at a rate equal or above to what we have in U.S. commercial for the next 18 months, which is a very high goal, but it is one we can actually get to because we are fully aligned with what's right and what's good and what actually works well in an enterprise. And for the first time, people believe us. And if you didn't believe us, you can believe 149% growth in the U.S., a rule of 40 that's 155, 93% aggregate growth, and 90% growth in U.S. comm with 62, 63% free cash flow margins. People thought we wouldn't be profitable. So this is one of the more exciting times to be at Palantir. It's one of the more exciting times to participate in Palantir. And for everyone on the sidelines, you got to get off the sidelines. This is a revolution that will affect the sovereign revolution. Where you stand in it will affect your livelihood, the livelihood of the people you care, and whether America and the West win. We cannot regress to a thin philosophical model where only a small group of people who think very differently than most of us actually absorb all of the revenue and value in our business and transfer all the dangers to us. And that's what this revolution is about. And it's extremely motivating for those of us at Palantir. Thank you.
Thanks, Alex. Our first question is from Dan with Yorkville Ives. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Where's the prompt? Well, while we're waiting, you can be entertained.
Maybe we can circle back to Dan. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
I think I'm good. Thank you. Can you walk through this at the Sovereignty Bootcamp? What did you learn with talking to customers that maybe you weren't expecting? I mean, obviously, just an overwhelming sort of group of executives. Can you talk about that, Alex?
Well, first of all, for those of you not in the know, we did a sovereign boot camp after this kind of revolution exploded. And just to give the backdrop here, 2 years ago, we spent 4 or 5 months, Sasha, who runs this, organizing AIPCon. This was much more like, hey, let's invite our buddies over to lunch. And then all of a sudden, we start getting bombarded by people we invited, people we didn't invite, all levels of the business. So like when you're working in enterprise, it's really important that the operational people are interested. So it was like CEOs, operational leads. And there's a huge educational component, and Shyam talks about this a lot. Like people understand that they need a way of controlling their alpha. They understand broadly that token maxing is at their own cost, and they certainly understand that token maxing is leading to them transferring their data, their prompts, the way they run their business, their expertise to a third party. But they need education on what they can do about that with us, preferably, but also without us. How do you do contracts? How do you work with open weight models? How do you work with closed weight models? How does this work in ontology? Is ontology the protective layer that they've been told? Does it create value the way how would this look in their own business? And how would they work with the compute stack? And so there's just this massive demand, and we're in the business of educating people, both our customers and others. But it was a super heterodox group of people, both in terms of the kind of people showed up, the demand for it, and also people we've not worked for. By the way, one of the reasons the NDR number is so strong, ridiculously strong. I mean, people always write these things about customer adoption and maybe, but the NDR number is anomalously strong. That is also going to shift and even as hard as it is to believe, become even more positive, because some of our older partners we haven't really interacted with, they also showed up. They're like, oh, okay, now we get why we would need you. And not just Foundry. They're migrating across our stack. So customers that were only using Foundry now want ontology, now want to be part of the Sovereign AI stack. I would say, last not least, you're asking the external version, internally. Recruiting, retention, excitement at Palantir. I'm very excited. I think the people around this table are very excited. The legal department is excited. That hasn't happened. That doesn't happen. Like, they're out like rock on. So it's more fun, you know? So yeah, there's just that's the way this went down. And I think this is the way beginning. So the way at least we think about this internally is, what portion of the market is available to people who want to create value, create value and keep it. That portion of the market has gone from a small portion of the market where we're doing well to like a large part of the US GDP. And that's why we need partners. Behind the scenes now, we're trying to find partners. Now, partners, we need technically exceedingly competent partners. Partners doesn't mean a vassal. We don't have to agree on every issue. We don't even have to agree on every client. They can occasionally compete against us. We've seen this in the defense tech stuff. Stack and Sham, like the approach to defense tech where we partner with people. Partner doesn't mean we agree. Sometimes we compete, but it means we're marching in a similar direction. It allows us to scale. So those things are going to be a very big, important part of like essentially the guide. Why am I pushing the company to grow, not to just the end of the year, but next year? It's because that also forces us to find ways to scale to meet the demand that's out there.
Thanks, Alex. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Hello.
So a follow-up to Dan's question. When all this AI revolution started, right, it was really clear for enterprises that data and proprietary data and how you train your models was going to be the key. But then we're like 3 years into that revolution, and now everyone started to realize, oh, owning my data and wherever I learn from my data is important. What happened there? Why you think that you position yourself back then in a different approach to AI that enterprises weren't able to see? And why these numbers that reflect that you're the winner of AI today, it wasn't that clear for any other software application back then?
Well, you can kind of divide it up into two parts. There's the first part is efficacy, and then the second part is efficiency. That's not quite the right word, but it's like, how do you scale it? In the 0 to 1 phase, it's much more important to focus on the application layer. Like, okay, this new thing has happened. How do we turn that into economic value? And then as people started to experience the economic value and as time started happening, you started to see that some of the people who were partners out there were building things that were competitive to you. And I think that took some time to kind of seep into the psyche and mindset of, wait a second, this is maybe not, now I know this thing is valuable in the right hands on the right platform, but I also am going to need to control the weights, that the alpha that is being generated isn't simply the data that's resident in my enterprise. It's also the metadata, the reasoning traces, the exhaust, the usage of this, which I don't yet have mechanisms to control. And now I understand that's actually probably more valuable than just the data in my enterprise. And that's been a clarion call, I think, for the market over the last quarter, 2 quarters.
There's also the question implicit in your question is, why did we get this right? And again, I think we are actually fully aligned with our partners. Sometimes we make decisions like, that are against our economic interests. Like, we're supporting lots of institutions in Europe. The growth sucks. I mean, clandestine institutions. But without our products, they would have rampant terrorism and their migration problems, and the results would be 10 times worse. It's not actually in our economic interest anymore to do this, but we still do it. And it's because we actually are believers, for better or worse. I would say also, this is a company that from inception, has valued artistic insights, meaning you can't model something purely on science. You have to have an aesthetic or artistic appreciation for it. And we've made huge bets. Everyone sitting at this table and many, many hundreds of people at Palantir have essentially artistic insights. We've always viewed ourselves, we've always said we're a colony of artists, and people assume that means we're just difficult. And that's also true. But, it's also, we value insights that are way before anyone else would see them. And we build major parts of our business. That's very hard for normal business to do because, one of the jokes running around Palantir is we can definitely meet our guide next year if we get paid for all the people copying us. So we get a small portion of people copy, of the funds for the copiers, we do very well. Normal businesses, again, no critique here, are built around, there was a playbook, we execute on that playbook, and we're in a non-playbook world. So executing on a playbook that worked 5-10 years ago, essentially build parasitic software and monetize it, that doesn't work now. And there's hundreds of variants of that, but that is a central advantage we have. We are a colony of believers and artists that are very motivated to drive value. And that sets us aside much more than I would have imagined 10 years ago if you'd asked the same question. And then luckily for us, this is capitalism. I mean, DSA wants to get rid of it, but until they do, you got to look at the results, because if our results, and the other thing I'll tell you that's very special for us, we are outsiders. Outsiders, like you're an outsider. You come to this country, you better have really good results. And like the same thing for Palantir. We know we need the best results because people aren't buying our product because we're swinging the golf club correctly or paying for the steak dinner. They don't even invite us to steak dinners. So that outsider status has causes huge problems, but in the first 18 years, but a lot of benefits in the next 18 years. And other people don't like being outsiders. In fact, I'm struggling with our current popularity.
Thank you. Our next question is from Gil with D.A. Davidson. Gil, please turn on your camera and then you'll receive a prompt to unmute your line.
Thank you. The topic of sovereignty, you focused a lot on how dangerous it is to give the keys to the labs because they could choose to compete with you. Is there another aspect of this as well, though, that if you choose a lab and you buy the orchestration and the consulting and the harnesses from them, you're beholden to their models? And if something happens, if it's not the best model anymore, if the model gets pulled, then you as a customer are stuck and you may have a mission critical system fail. And this isn't hypothetical. This happened a couple of times this year where one of the frontier models got pulled by either the government or the company. Well, if you work with Palantir, I would assume that when that happens, you can go to your customer and say, hey, if that model doesn't work, I can plug in another model for you.
No, I mean, I'll let Ryan and Sham comment here, but we're already doing that across the US government. We have a product that allows you to switch out models. Look, at the end of the day, if you are locked into a product, you're going to, that's the nature of monopoly capitalism. That's why people want the lock-in, because then they can raise the prices and reduce the quality. We're against that because we're on the side of the American worker, the American people, and its great institutions and other institutions across the West. But yes, people are running big enterprises in this country are very sophisticated. They're aware of these risks, and they don't like people who are kind of flaunting, setting this up so that they feel they're being made fun of or they're a sucker, basically. So there's a lot of anger here. I spent, interestingly, a fair bit of my time trying to explain to people that, some of the people involved in these things are not the caricatures they think they are, but because the business setup looks like heads I win, tails I win. And American business people don't like that. But then, I don't know, there's a lot of things on the contractual front that would support that.
Yeah, I would say that's, our whole focus is converting tokens to value. The example Sham gave, that's happening across the board in the conversations with customers. That's why they're looking to expand, to convert how they position themselves in the industry with us, in their industry. And so we're seeing extreme alignment. It's not about being beholden to one model. It's about bringing the right models to bear for the right purposes. And our contracts, our structures are set up to do that, to support and compound their alpha in the organization.
I think, I mentioned it earlier, but you're going to see this, we've been beholden to a small number of benchmarks that people have been designing models to, and then releasing models saying look how well it does on this benchmark. But the benchmark has actually almost nothing to do with your business. So how do you figure out how to make the benchmark that represents your reality, what you're trying to succeed at, what you're trying to get better at, and then see what model makes sense? And the natural consequence of doing that, even leaving aside all of your other arguments for sovereignty, is how do I climb that hill? How do I figure out what it is that I do as a business that I feed back into weights that I can control, which presupposes an open model and sovereignty? And then you're not just going to do that where you're waiting, hey, maybe I'll switch it out when this model gets pulled, when the rug gets pulled out from underneath me. You're actually going to be leveraging the automation to do that constantly, to figure out when you have a next checkpoint that you can forward. Maybe there's a new model. I mentioned the example. I literally almost felt gaslit when within 24 hours of getting Nemotron up with no post-training, this is vanilla Nemotron Ultra, it did better than Frontier. You know, if you just looked at the numbers, you would say, well, it's nowhere near the Frontier. That shouldn't even be possible. But of course, the benchmarks are wrong. I mean, the benchmarks are right for what the benchmark's measuring, but that's not my business. Those are not the tasks my customers had that they were trying to solve. And so then moving this to an empirical basis is, I think, is how we're going to accelerate the realization of tokens to real economic value.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Well, you know, your support was crucial to getting us this far, and you know, crucial to getting us to where we're going to go, which is a much larger company. This is one of the most exciting times to be involved in the Palantir mission. We are going to help transform, especially this country, but allied countries, both in commercial and government. And this sovereign frame that we're using as our organizational principle is one that is inclusive of everybody who wants to have a better world today and tomorrow. And we invite everyone to engage with it in some form. And thank you.
Thank you. That concludes Q&A for today's call.
Shorter call, or is this usually it's usually this short?
I mean, when you don't really have many analysts asking questions, then that's
was
what
that
we
even
get.
more than usual? I usually only remember the first two, Dan and Mariana.
Yeah, I don't know. Yeah, maybe he did join last quarter, so I'm not sure. But anyways,
now why is that? Why don't they do more analysts?
I don't know. At first, I think it was purely because, well, they didn't want the analysts that were bashing the company time and time again, like a couple of years ago. And honestly, I don't know, because it was quite interesting, because we were always talking about the fact that on Palantir's own website, you can see like analyst coverage, and there are like 15 analysts on that page, and yet we only get 2 during the earnings call. So maybe they have something better to do on that same day, or they just afraid to come on. I don't know.
Yeah. No, that makes sense. Yeah. Did you pick up on anything during the call that was not said earlier in the thing? I mean, I was just going to add, I just think that Sham did a really good way of explaining that the benchmarks are not the be all and end all of an AI model. And that's super important, because people put a lot of emphasis on those, even saying that, you know, Chinese models or Chinese open weight models are as good as Anthropic Fable 5. Once you actually use them, you know, I still prefer a lot of the Anthropic models personally, but obviously the cost is very, very different. So maybe one is worth it at the end, but to each individual business, it's definitely very different.
Yeah, I think it's also something that Meta talked about in the last earnings call, talking about, first of all, that they are focusing more on the agentic capabilities. And second of all, they also talked about the overall benchmark scores. Again, he has a point, right? Because the benchmarks are benchmarks from these companies that are testing specific things. Doesn't mean that it's good for your company, for your workloads, etc., etc. So what they're doing is they did talk about fine-tuning models, right, for specific, I think, governments as well, sovereign AI. But then when they were talking about the fine-tuning of things, he did say that, and I quote, "I'm driving the business to grow at a rate equal or above that what we have in US commercial for the next 18 months, which is a very high goal." And I mean, US commercial is growing above triple digits.
It's like 149% or something, right?
Yeah. So
they're driving the business, the entire business, to grow faster than US commercial growth that we just saw
for the next year and a half.
All right, that's the takeaway from the quarter then.
I mean, it does, I guess it makes sense, right? Because if they're doubling, then you can equal or do more. And then I guess we go back to the free cash flow question we had before. I mean, if he does plan to do this over the next 18 months, then I guess you can reach $15 to $18 billion by fiscal 28.
Yeah, I mean, it still looks hard. Even the way that they're guiding 4.6 billion in free cash flow this year, they're going to have to continue to raise it every quarter. So they likely will. They just raised it $300 million from a single quarter. You know, you do that 2 more times. The guide changes pretty quick. But guys, I think zooming out is super important here. Not worrying about the stock price just after hours, which is up, you know, almost 12% right now, which is great. But you're buying into a company that's growing 93%. Cash is like everything that we talked about whenever the numbers released is incredible. Personally, for me, you know, almost looking to like that Warren Buffett strategy or Charlie Munger strategy of it's okay to pay a little bit of a premium if you're buying an exceptional business. And then hold it for 2 years, and then you look back at the PE if the stock ended up staying stagnant for a bit. These types of businesses do not stay expensive for very long. Look at NVIDIA, staying around $200, letting a couple quarters pass, and here we are at, you know, the PE's gotten cut in half. So I'm such a happy shareholder here, but I'll let Neil speak, and then do you want to wrap from there?
Yeah, no, I mean, we can wrap right now. They did mention NVIDIA a couple of times, right? Nemotron, so that's quite good as well. But yeah, I mean, we said it before during the earnings call, not that much gets mentioned that we didn't read or get from the presentation or press release. So yeah, another excellent quarter. And it seems like, and for people that think that Alex Karp is only excited because the business is doing well right now and the stock is up, I mean, he's been doing this earnings call like this for a long time. In this case, he didn't bang the table, just the pen banged the table from now and then. But yeah, it seems like they feel like they can continue to accelerate growth and produce these insane numbers quarter after quarter for the next apparently 18 months.
Yeah. Hopefully, I mean, fingers crossed, but I have real belief that they'll be able to do that. So I'm going to continue to hold. Ladies and gentlemen, sorry, go ahead.
No, I mean, I've continued to hold. I mean, did you see something that would make you sell?
No, not at all. Not at all. Ladies and gentlemen, thank you all so much for watching. If you've enjoyed our coverage, make sure you check out Neil, myself, Future Investing, Couch Investor. We'll
see each other tomorrow.
Yep. AMD. All right. Bye for now.